Good morning, everybody. Man, it's Friday. How are you guys doing today? Hopefully you can hear me all right. Morning, Steve. Morning, Ron. Steve, did you get my email? I responded to you this morning. Cool. Feel free to reach out if you have any questions. Morning, Erla. Good to see you. Ron, always a pleasure. We got some of the cool kids in here. Rom, good to see you back in here. It's been a while. Small crowd so far. Maybe everybody's doing something today. That's okay. Which is too bad. I was hoping for some newer people today because I've got education on the brain. I really do. Anybody watch news this morning? Went crazy. Crazy. Let me refresh that. There's the numbers. Every morning I wake up and I look for news. Every morning I make sure, I look for high impact. I look for medium impact. And it was interesting because Pete posted something about the numbers, talking about how they were right on projection or something. Number came in right at forecast, 4.2, right, for unemployment. One of the things looked like a blue light sale. That would have been Kmart, Ron. That would have been Kmart was the blue light special. Guys, I don't worry personally about what the news says. I don't trade news. I don't trade the reaction. Really, what knowing where news is about to print or about to release just lets me know when it's time for me to avoid the market, to be honest with you. It lets me know that there may be an emotional reaction, that there are people waiting for those numbers, and there's people that are going to make a move based on them, even if the numbers come out right where they're supposed to be, right? And that's what we saw this morning with unemployment, and that's, Pete, your comment about how it was as projected, it kind of struck a chord with me, and maybe I'm thinking of it the incorrect way. But if everything came out as planned, there was still a big emotional reaction, right? So it doesn't matter if it's good news or bad news or news that just is exactly what's expected, it can create a reaction in the market. And one of the biggest advantages that I think we can give ourselves first thing in the morning is go to forexfactory.com, look for news, see what it's printing, and then just make the decision. I'm not going to trade 3 or 4 minutes before high impact or medium impact news because it may make the market go crazy. At 11 a.m., FOMC Waller's going to speak, guys, and they're expecting a huge reaction. It's high impact, which means that at 10:55, a lot of you are going to have alarms set or sticky notes on your monitor that say, hey, don't trade into that news. Things might go crazy. So every morning I check news, and then I take you guys over to the Nexgen website. And I want to show you where all the answers come from, guys. Everything that you need to be successful with the software. And I realize that I need to reiterate on this one. Everything that you need to be successful with the software. I don't keep secrets from you. I give you everything that Nexgen provides. Steve, you made me think about that one. I'm going to give you a rock solid foundation today. I'm going to give you everything that you need to find success with the software. It doesn't mean that it's everything that's out there. And it also doesn't mean that I'm obligated to give you everything that I've studied in the last 5 years, right? But I'm going to give you what you need, I promise. And from this foundation, you'll be able to create your own trading plan. And that's kind of cool. And guys, I got to tell you, and this is from experience, the plan works, the path works, embrace it. And the easiest way to get to where you want to be, the fastest path to finding your way is focus on what we call a high probability trade, guys. This is a high probability trend trade. This is a trade where each indicator on every chart is going to agree for the trade. This is when the triggers are the strongest. This is when there's nothing in your way, nothing between you and your target. And guys, this is the best of the best. This is what I focus on for an hour. And I focus on this high probability trend trade because it's this trade that teaches you to read your indicators. And I can't overstate the importance of learning to read your indicators, to focus on the basic concepts, excuse me, because we're waiting for the market to tell us that it's time to get into a trade, guys. And if we don't know what we're listening for or how to hear it, then it becomes difficult. And you find yourself a little frustrated, looking for things that don't exist, creating your own rules. So I would encourage you guys, please, 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 let it be simple in the beginning. Focus on this high probability trend trade. Get good at it. Understand the rules incorporated, what they look like, what they mean to you, and learn how to read your charts. Because chart reading is 90% of your day. Chart reading is looking at your indicators and understanding that advantages are present, that patterns are present, that have been proven to win more than they lose. And it's your ability to read your charts that's going to let you know that your rules are met. And if you sidestep that high probability trend trade, if you're fuzzy on the ideas of momentum or termination conditions, guys, it's going to be difficult because you're going to make mistakes. And it's okay to make mistakes, but focus on your chart reading because it really is. It's 90% of your day. 10% is just hanging out and trading. 90% is waiting for the advantages. And I put this up and I posted this in the room, and I want to bring it back up just for you guys that are curious, guys, to minimize your learning curve. Post your pictures every day. Post your pictures of your trades in class, guys. Every trade, win, lose, or draw. And if you win and the rules are wrong, you may have a short-term victory but a long-term failure. How are you going to know the difference? To be sure, you need feedback, guys, and we're here to help. If you place a trade on the simulator, if you're participating in class, there is no risk or loss of capital. You need someone to tell you what you did right or wrong when you're new. And this really is the educational magic, guys. I can look at your charts and I can help you with your chart reads. I can look at your charts and I can help you with your entries. I can look at your charts, I can help you with your exits. The only way that I can't help you is if you don't share your charts with me. So I encourage you guys, post a lot, ask a lot of questions. We're going to focus on the high probability trend trade because it's going to teach you guys how to read your charts. And then I'm going to be the one that makes sure that you're reading them correctly. The high probability trend trade is 3 rules. That's it. Each rule provides an advantage, and it's the 3 advantages that create a trade. A high probability trend trade is momentum, a clear path, and an entry area, each clearly defined by a rule. And in the beginning, I encourage you guys, be very, very adamant on having the rules met before you enter a trade. Make sure that you understand the individual concepts, because it's the concepts that create the trade. And momentum and a clear path, once you understand these 2 advantages, once you can pick them off a chart, the sky's the limit for you. You're going to find so many opportunities. These 3 rules come to be on only 2 charts. There's a large chart and a small chart. Big chart is, it's slow. It's a broad stroke of a brush, guys. This is painting the living room wall and not worrying about the outlets or the light switches yet. Your large chart on the most current bar is going to define the direction of the market. It's going to define the momentum in the market, and it's going to define any areas that may be problematic. And then your entry chart is just a small chart. It's a tiny little refinement chart. And what you'll find is that inside of this 1 bar on the large chart, there's typically 20 to 30 bars. It's the same market, the same price. You're just getting an X-ray, and that X-ray is going to allow you to reduce your risk and to increase your profit potential. You will be tempted to add indicators. You will be tempted to add charts, different time frames, different style charts, because you saw somebody else doing it. I'm telling you right now, as a brand new user, the more you give yourself, the more difficult it becomes to get proficient at the basics. So keep it very, very simple. 3 rules, 2 charts. And we use these 2 charts because there's driving forces in the market that are not us. We are not in control. We never have been, never will be. But the large crowd is a reflection on the large chart, guys. The people that move the market, that establish trends, that react to those key areas. Hey, good morning, VCP. The large chart leads the way. The large chart tells you when it's time to go to the small chart and look for an entry. And the small chart's this crowd of yahoos that isn't afraid to run into traffic, guys. And they create these little ripples that you're only going to see on the small chart, where they try to fight the trend, where they try to fight the momentum. These guys fail about 70 to 80% of the time, which is why we use that small chart to pinpoint exactly where their failure is most likely to happen. So if they fail 70 to 80% of the time and we enter at their failure point, we're likely to win 70 to 80% of the time. And that's kind of the cool thing. It's just a pattern that's been proven to win more than it loses. And then your path to get to where you want to be. I already focused on this first one. Post in the room, guys. Don't be shy. Post in the room. Win, lose, or draw. Right or wrong. Good read, bad read. Doesn't matter. Post in the room and let me know what you see on your charts. The easiest way to do that is every time you take a picture, type on the chart. Describe the momentum. Describe the path. And tell me where you entered and why. And if you go through this on your chart, all I'm going to do is make sure that you're reading your indicators properly. All I'm going to do is make sure that you understand those very basic concepts of momentum, path, and an entry area. And then VCP, we will get to your chart. I'm going to go through the rules, and then we're going to go back and we're going to talk about them. I love that you're already annotating charts on day 2. So give me all the information that you guys can. Actually, you know what? Let's see how VCP did on giving me the information. So he talks about his triggers, strong. No divergence. It's just that separation. Absolutely wonderful. Momentum is great. And then a small reversal with small and large triggers staying red. Trend trade entry point. So guys, what VCP has just showed us, he's described his momentum. The one thing that you didn't describe was your path, whether or not you had a clear path. And we're getting it up here, and it certainly looks like you have that clear path establishing. And you take a pullback to areas inside of favorable large triggers. And VCP on day 2, you're already figuring this out. On day 2, you're already going rock star on it. And this really doesn't fight at all. It shows the little fight. It shows where the small crowd tries to push, and you pinpointed their failure for entry. Guys, this is day 2. I love it. Wayne, you're a rock star already out of the gates. And you know, you inspired me to create a little lesson for class today too. Thank you. So that's it. Post in the room, right? Post in the room and talk about it. Talk about what you see, what you did. All we'll do is we'll talk about your chart read. We're going to learn the rules for when it's okay to trade. You guys are going to simulate. You're going to practice. You can't lose money on simulator, guys. It's the same way pilots use a flight simulator so they don't crash and kill people. The same way we all went to the batting cages as little leaguers so there wouldn't be the fear of a strikeout, right? The same reason we go to the driving range so that we can hit balls and work on our mechanics. Guys, just practice, 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 practice. But the idea is you want to practice the right rules. You want to set yourself up for long-term failure. You want to be looking for those advantages. We're going to simplify. I'm going to give you what's called the KISS plan. And the KISS plan is designed to optimize your chances of success. The KISS plan is 100% dependent on your ability to recognize momentum, a clear path, and initially the entry area. So that's what we're going to talk about for the first hour. Your job from day 1 forward is to learn the looks. To learn the looks so that they become easy. To recognize the patterns so that you can pick them out of a market when the market is moving. And that's where the spreadsheet comes in. I give you the spreadsheet every day. I'll give it to you again right now. But the spreadsheet's just an Excel spreadsheet, guys. And the first page is your trade journal. So, everything you do, win, lose, or draw. Every time you take a trade, win, lose, or draw. Drop it in here. Annotate your picture. Talk about your advantages, whether or not you won or lost, because that's important to a lot of people. And then, guys, the feedback from class. So every time you post into the room, you're going to get feedback. I can't help it. Sometimes I'm going to turn your chart into a lesson for the entire room, and you're going to feel like I'm singling you out. I'm not. But it's very much like church in here. If it feels like the pastor is talking directly to you, then you probably need the lesson. So pay attention to the feedback. I don't shame you. I don't berate you. I don't fuss at you, someone said yesterday. But what I will do is I'll take your chart read and make sure that it's accurate. And if I see an opportunity for you to have a better entry with less risk, we'll talk about it. And if there's an exit that makes more sense than the one that you took, we'll talk about it. So make sure that you're posting in the room. Make sure that you're using the spreadsheet. And whoops, there's where I was going. The idea isn't just to use a spreadsheet, right? Has anyone ever done something where you have to go back and study the notes to see what happened? Right? It's like when football players go and study the tapes from the game before. You're going to do the same thing. You're going to look at what you did yesterday and you're going to ask yourself what worked, what didn't work, what kept me relaxed, what felt forced. And this little study every day is going to have you focused on advantages. It's going to have you focused on the patterns that are bringing you success. And my annoying trait, ask my wife, is that I recognize patterns. I recognize patterns in the market. I recognize patterns in people even more so. And that's why I'm teaching this room. Because if you give me 5 charts with your chart read on it, I'm going to know what your thing is, right? I'm going to know almost instantly that you like to trade into areas more often than you don't. Or I'm going to know that you're fearful and don't trust your plan, and that's why you're moving stops, guys. And then I'm not going to knock you down over it. What we're going to do is we're going to work together to fix it. So make sure that you're studying and make sure that you're posting. And then guys, on the spreadsheet, the second page is designed to break down the very basic concepts of the high probability trend trade. Each rule is highlighted in green here. Strong triggers, clear path, and then your entry. And I did this because what happens very often is people come into this room and they decide to themselves, you know what? I sat through the 101 class once. I'm going to go trade and I'm going to go make money and I'm going to do this. And they don't have an understanding yet of what it means to have strong triggers because they've never asked for help. The same is true with clear path and terminations and all these things. But very often people go and they trade their version of reality. And quite often their version of reality is very counterproductive to their success. I was working with a friend of mine and he told me, he goes, man, I'm really good at the momentum side of things. He goes, so when the price bar's in the mid band and I had to stop him and I was like, whoa, strong triggers has nothing to do with price bars and has absolutely nothing to do with mid bands. And he was actually making everything more difficult than it needed to be, guys. So trust me, I'm all about simple. We're going to break them down individually exactly what they need to be. You're going to have a section where you can build your own trading plan. And then guys, there's the client trade section. And this is so much information. First of all, this is the high probability trend trade entry sequences for shorts and longs. Exactly order of operations from the beginning to the end. You should study these. And then these are the client's perfect trades. These are people doing great things with the software. And what you'll notice is that they don't all fit high probability trend trade rules. But almost every winner on this page revolves around momentum and a clear path. And you'll begin to recognize that as you study. There's management ideas initially. This is going to be a very mechanical approach to management that keeps you focused on basic movements rather than profits. And then you'll be able to grow into bigger moves, bigger holds, different scenarios, patterns that repeat themselves, and then a whole section dedicated to that rule number 2, termination conditions. Because rule number 2 is the most broken rule out there. So you've got to learn the looks so they become easy. And in order to do that, let's learn them individually. Let's not look for a trade. Let's look for 3 advantages. Talk to yourself out loud. I have this advantage, therefore I'll look for the next. And the first advantage that you're going to give yourself is strong triggers. Strong triggers means that you have momentum. And guys, remember, this is a large chart. The large chart leads the way. So it's just a look. Small triggers above the large triggers, space between the two, like scissors that are open. Guys, that's strong triggers. It really is that easy. And I confused the hell out of somebody once because they're like, but Mark, you said that the colors and the these and the those. And I realized that sometimes I have to simplify. When the small triggers are below the large triggers, when there's space between, guys, these are strong triggers. I could paint these any color I wanted, but this is your look. It's the separation between the small and the large. In an uptrend, it's the separation, small above, large below. And when the smalls are above and pointing down and the large are red, guys, the colors have to be the same. So green means up. That's the easiest way to say it. Green means up. So if your background is green, your trigger should be green. And then you're looking for that look, that separation between the two. When the background is red, it's going down. So you're looking for that very specific look. Small triggers below the large, the space between the two. Guys, this is strong triggers all day long. And strong triggers push a market, and strong triggers can break areas, and strong triggers can even cover mistakes, guys. And the look is consistent on any chart. I don't care if it's a range chart, a day chart, a month chart, a stock chart. Strong triggers means that in an uptrend, smaller above the larger wide, the space is there. And when I have this look, guys, the odds are favorable for the market to continue with the trend. And when I have odds favorable momentum, that's what you're going to hear it called in the room, odds favorable momentum, the market's likely to continue, guys. So if we look at, this is crude oil right now. I'll blow it up so we're not distracted. I can take a picture, and this is what I'm encouraging you guys to do if you really want to get to where you want to be. We're not talking about entries, exits. We're not talking about management. All we're doing is drawing an arrow, and I want you to see this. Green background, trend up. Smalls above the large, space between the two. Guys, this is strong triggers. This is momentum. This is rule number one met. And what I want you to do is start taking this picture so that you never miss momentum. And then just in the same picture, I'm not taking a trade, right? I'm not entering, I'm not exiting. I've got no fear of loss. Red background means down. I can't type. Smalls below the large. Space between. Strong triggers. Momentum. Rule one. So my job, let's go all caps on this bad boy. My job as a brand new user is to be able to recognize this look. This look is mandatory for me to go to the second rule. As a brand new user, right? Does that make sense, everybody? You can only have strong triggers up or down. You can't have them left or right. You're going to be going with the trend. And guys, this is rule number one. And if I'm insisting on rules being met, it's imperative that I have this look. I believe that understanding the opposite side of things, right? If this is what I need to take a trade, well then when the small triggers return to the large triggers, this weakening of the large triggers, guys, my advantage is gone. This is weakness. And when I have weakness, anything can happen up or down. And what you'll find is that throughout the day, you're going to have strong triggers and you're going to have weak triggers. And you're going to have weakness, and it's typically going to precede a reversal. And when we reach those key Fibonacci areas, they're more likely to hold. And I've labeled it ACH. Anything can happen, up or down. And then it reverses. And it gives me that odds favorable momentum. These tails on the large chart are those pullbacks on the smaller, faster chart. You're actually going to be able to pinpoint exactly where these tails are most likely to form. That's going to become your entry for the high probability trend trade. Momentum carries the market up until we have weakness. Anything can happen. And there's that reversal. And guys, this is going to happen all day long, which means that when I have this look, I'm doing absolutely nothing. But when I have this look, I'm going to rule number 2. And then sometimes you're going to get this transition phase where there's no agreement, right? The larger down, but the smaller up. One is red, but the background is green. This is a transition phase, guys. This is where the buyers and sellers are fighting, where there is no agreement one way or the other. And momentum is all over the place. It's like scrambled eggs in the middle. This is where new users are tempted to predict what the market will do. But really, guys, rule number 1's not met, which means that there's not a trade. And if you sit patient, eventually that momentum comes back. So I actually really like this picture. This used to be a part of the teaching. 90% of your day is doing nothing, guys, and the same is true on momentum. You're either going to have the advantage of or you're not. Is everybody good? I try to keep it very simple. Separation means strength. Smalls inside of the large means weakness. Can we go to rule number 2? Everybody's good. We have the advantage of momentum. We have a market that's likely to push in the direction of the trend. We have a look that's capable of breaking areas, covering mistakes, and now we need to make sure that our path is clear. We need to make sure that there's nothing between us and our targets, guys, and that is rule number 2. Making sure that there's no termination conditions. And a termination condition is nothing more than a Fibonacci-based indicator that has the potential to stop the market. I just dropped it in the room, and I'm going to show you right now. This is your roadmap, guys. This has nothing to do with entries or exits. This picture has nothing to do with trigger lines or price. These are the lines on a large chart that may stop the market. These are the lines on a large chart that may create an untradeable bounce. These are the lines on a large chart that may reverse the market completely. These lines on a large chart, guys, this is where the large crowd is making decisions. Where buyers buy, where sellers sell. And you have the advantage of knowing exactly where they are before you ever reach them. So these areas, memorize them. Not how, hey, happy Friday, Miss Jen. Nice to see you. Understand that these are the areas that we're looking for. And then there's a recipe to determine whether or not they're likely to hold the market, whether they're likely to stop it, whether they're likely to create an untradeable bounce, guys. And everything begins with price reaching the area, which means that your price bars reach Fibonacci resistance or your price bars reach Fibonacci support. When they do, all you have to do is ask yourself, where are my triggers? And if the triggers remain below an area of resistance, this can be red Fibonacci resistance, this can be those yellow 1-to-1s, it can be a divergence high line. If price reaches resistance and the triggers remain below, this is an area that may stop the market. This is an area that might create an untradeable bounce that may reverse it completely. If it reverses it completely, we're going to call it a strong top, which means that anything that happens the other direction is more likely to win. But guys, the deal is price is going to reach it. And the triggers remain below, and all you have to do is sit still for a minute. It may break, it may not break. You'll never know. They don't send out a memo. Price reaches support. Where are my triggers? Triggers remain above. Rule number 2 says no trades into that area. So this is a sit on your hands, pump the brakes, stay calm, whatever you need to do. But this rule has been established because more often than not, the area will hold or create an untradeable bounce. More often than not, guys, which means it's a coin toss, right? And if you bet heads every time, but tails is going to happen more than 50% of the time, you're going to struggle. This takes away your advantage. And this is the most broken rule ever. And it's really one of the most easiest to identify. If price reaches these yellow 1-to-1s, the triggers didn't break, Nexgen users knew not to go long into that area. Yellow 1-to-1s, divergence highs, stop the market. Fibonacci support stops the market. And guys, all you have to do is scroll back and you'll see they break sometimes. But more often than not, if you go back and tally the times that these areas stop the market, what you're going to find and what you'll begin to trust is that you shouldn't trade into them. It's the easiest way to avoid unnecessary losses. And these areas they break all the time. So we're going to go through the life cycle of an area that is going to break. And I'm going to take the picture here. This shows when it's broken. So let's use some fun little stamps today. Price reaches the area and the triggers remain above. And this is our termination condition. Can you guys give me a why if you're okay with that? I say the same thing 1,000 times because I want you to feel that in your bones every time you reach an area. Where are my triggers? Where are my triggers? Awesome. Thank you for your participation. When the small triggers and the large triggers get below the area, both lines, small and large, the area is considered broken. When both the small and the large triggers get above the area of resistance, the area is broken. It's time to look for rules to be met, guys. For the brand new user, these are your two options. It's either a termination condition or it's a broken area. The path is clear, and that path remains clear until you hit the next line. Once you understand these two concepts, it opens the door for your second trade. And I'm going to give you a plan for this second trade. Guys, when 50% of your triggers break through the area with odds favorable momentum, but 50% are lagging behind, that slower, larger trigger is lagging behind, this area has the potential to break, but it's not a broken area. It's not a clear path. Rule number 2 isn't met. Because in order for rule 2 to be met, both the small and the large must break. This potential to break look, I'm going to give you a plan on how to take it with the highest chance of success. This, again, is one of the most lost trades. Trading into termination conditions is the most broken rule. Losing trades on the potential to break is the most lost trade. I'm going to give you a plan that helps you do the absolute best with it. This picture reminds you that even though the fib is cleared, right, smalls and large get above it. Hey, good morning, Andy. That path is only clear until you reach the next line, guys. And this is a very common scenario. Fibonacci areas are developed from the psychology of the market, from fear and greed, from ups and downs. And sometimes they're going to be stacked. You're going to find yourself with area after area after area. And this is where you have to remind yourself that 90% of your day is doing nothing. 90% of your day is just waiting for those advantages. And I've never had anyone tell me that the wait wasn't worth it. Guys, price reaches support, triggers are above. This is a termination. And you're like, okay, no shorts. And then it hits another line and the triggers are above. And you're like, damn it, I still can't go short. And then it hits another line and you can't go short. And you're saying to yourself, I'm never going to make any money in this market. Not if I can't take these trades. And guys, the futures markets trades billions every day. Billions. You need to make 400 a day to find yourself in 6 figures with your trading. So remember, 90% of your day is doing nothing, guys. And Fibonacci, the brilliance that this software is, and I don't mind saying that, it gives you the ability to see where the driving forces of the market are likely to make decisions. You know before the market ever gets there, where that market is likely to reverse, where it could stop, where it could take you out of a position. And very often, rule number 2 is going to keep you out of consolidation. It's going to keep you out of what you guys like to call chop. Because without that clear path, our commitment to rules say don't take that trade. And guys, it's such a huge advantage. Take the time to study rule number 2 to become comfortable with it, and it'll change your trading. So is everybody good? Can you give me a why? You don't have to. I know you guys don't feel like talking today, and that's okay. Momentum is defined on the large chart. Direction is defined on the large chart. Termination conditions, rule number 2, is defined on the large chart. Everything that we're looking for in the beginning, guys, it comes on the large chart. 66% of your advantages happen before you ever turn your attention to the small chart. There's a gentleman in here that encourages new users almost every day to don't even look at your small chart. Minimize it. until your rules are met on the large chart, and that'll help you avoid the temptation of breaking your rules. But once the large chart says up, once the large chart has a clear path, guys, we're going to look for an entry on the small chart. We're going to go in and we're going to define where that small crowd's likely to fail. If I turn my attention to the small chart and I see 3 divergences, 3 light blue lines off of pivots from a low, 3 magenta lines off of pivots from a high. Divergence means that there was a loss of momentum. Divergence means that while price pushed all the way to this point, my momentum is lagging somewhere behind. There is a slowdown that's calculated behind the scenes and given to you in the form of this blue line. If you see 3 in a row, 3 in the same price range, guys, it may terminate the trend. It might stop the trend. It might create an untradeable bounce, even if it's from the middle of nowhere. Rule number 2 isn't met. Same is true at a high. This becomes even more powerful with anything can happen triggers, weak triggers. The same look from rule number 1. And more powerful still if it creates a head and shoulders pattern. If it creates a higher pivot than the previous from a low, or a lower pivot than the previous from a high. And guys, if I go to look for my entry and I see this, I have to pump the brakes once again. Rule number 2 is not met. That is the only time that the small chart will talk me out of a high probability trend trade, guys. The only time. If my large chart has strong triggers, my large chart has absolutely no termination conditions, it takes 3 divergences on the small chart to keep me out. If I don't have this, guys, I'm going to use a limit order to buy or sell a pullback at areas inside of triggers, guys. Rule number 3 has you pinpointing exactly where the small crowd is most likely to fail. And this picture is great. Large chart has odds favorable momentum. Large chart has absolutely nothing in the way. Large chart says, let's go find an entry. Small crowd shows up and they create this little ripple, this little fight. And that fight, guys, you're going to be able to pinpoint exactly where it's most likely to fail. And it's most likely to fail at areas inside of triggers. There are 2 large triggers on your small chart. There is the smooth. These are the large triggers that are native to the 5-1. These are the large triggers that you're going to compare to the small triggers to define momentum. And these smooth triggers are where I expect the price on the small chart to return. And then you have synthetic triggers. And synthetic triggers are just the large triggers from the large chart. And I expect price on the large chart to return to the large triggers from the large chart. So what we've done is we've taken the large from the small and the large from the large, right? And we've created areas where we anticipate price to return. And when they're overlapping on top of each other, when they're like 2 snakes riding piggyback, what you've done is you've taken 2 separate correction points and put them in just one spot. And then when I put areas inside of those triggers, oh my gosh, these areas are the spot for the bounce, guys. I don't expect triggers to stop a market. I expect lines inside of triggers. Fibs, mid-bands, yellow 1-to-1s. I'm kicking a soccer ball as hard as I can, and I don't expect it to bounce until it hits something solid. The areas inside of triggers are that solid point. So I made some pictures for you guys today. Small chart price may retrace back to the large triggers. And I have 1-to-1s and I have a fib inside of those triggers. These may produce a bounce. The synthetic triggers, the large chart may retrace back to the large triggers. So I've got 2 correction points. Inside of there, I've got a mid-band. That may create a bounce. So what we're going to do, guys, is we're going to take the large chart triggers, the small chart triggers, and we're going to look for the areas inside. And we're going to create a window where the market is most likely to bounce, guys. And this becomes your entry for the highest probability trend trade. And it all begins with the fight from the small crowd. So when the large chart says up, because the background is green, when the large chart has odds favorable momentum, because there's separation between the small and large. They're angled, they're wide. When the large chart has not reached an area and the path is clear, I'm going to turn my attention to the small chart, and I'm going to wait for a reversal bar, a down bar after all of these up bars. And just a little heads up, it's going to be, once you get comfortable with what you're looking for, you'll start anticipating your entry right here. You'll start worrying that you're not going to get a pullback right here. Some of you are going to say, to hell with my rules, I'm jumping in right here. But the pattern that's been proven to win more than it loses, to give you that statistical advantage, says wait for the reversal bar. The reversal bar begins the fight. The reversal bar puts you in motion to find the best of the best spot to enter the area. So the first thing you're going to do is you're going to look for your trigger lines, large and synthetic. In a perfect world, they're overlapping, one on top of the other, because that's going to reduce risk. It's going to increase accuracy. Once you find your trigger lines, you've got to find those areas within. Fibs, midbands, yellow 1-to-1s. And guys, these fibs, midbands, and yellow 1-to-1s are where we expect the market to bounce. So the market may come down and bounce off of that midband, but the market may also push all the way down to those 1-to-1s and create a bounce. So we're creating a window where the market is most likely to continue in the direction of the trend. But because of the advantages present on the large chart, because of the strength, because of the clear path, your limit order is going to go at the top of that window, just above the highest point of support inside of triggers. And this is where you're going to get into the market, guys, and this is where you're going to get in with the highest chance of success. If the small crowd can push past the mid-band inside of triggers, past the 1-to-1s inside of triggers, and get to the wrong side of those triggers, guys, we don't want to be in that trade anymore. This line beyond the trigger lines, this is not a part of the equation, because once you get below those triggers, there's just no telling where that market may go. Your advantage is gone. The edge has been removed. So we're going to focus on this entry. And we can make money both ways. That's the beauty of it. Everything says down on the large chart. The trend is down, momentum is down, the path is clear, and you guys wait for the reversal bar. The reversal bar tells you to look for your triggers, large and synthetic. Are they overlapping? Are they one on top of the other? If they are, we're going to look for lines inside, areas inside, fibs, midbands, yellow 1-to-1s. Guys, this is one of those magical cases where there is one line inside of favorable large triggers. This midband represents the point where the market is most likely to bounce. Your limit order goes a couple ticks below it. And if the small crowd can push beyond those trigger lines, we don't want to be in that trade anymore. Every one of these lines beyond the triggers, guys, this isn't where we want to be. The edge is gone. So I'm going to ask real quick, is everybody good with that? Reversal bar has us looking for triggers. We're going to look for areas inside of triggers. And we're going to enter at the lowest point of resistance. Reversal bar starts for a long trade. We find the triggers, the areas inside. Your entry is at the highest point. Doesn't matter if it's a mid-band, a fib, or a yellow 1-to-1. They're all equal. They create a bounce point. Your initial stop, and this is where it's important, guys. Your initial stop is going to go where the market shouldn't. I want you to embrace that phrase, where the market should not go. Generally 4 or 5 ticks below the trigger lines. Because once we're beyond the triggers, we've lost our advantage, and it's better to be stopped out than to hope. And guys, anything that wins 70 to 80% of the time will get stopped out 20 to 30% of the time. There's this huge fear of loss among new users. Losses are okay. Losses are a normal part of a positive equity curve. The idea is that you take the correct losses, that you take the losses in the pattern that's been proven to win more than it loses. And the more you deviate from advantages, guys, the more difficult it's going to become to win. So when the large chart says up, when it has strength, when the path is clear, you're going to look to the small chart and you're going to look for an entry at an area inside of triggers. This is your pattern. This is 30 days defining entries, because once you can define entries, you can define stops, and that's the beginning of management. And guys, that's it for high probability trend trades. It's the same thing that I say every day. Every day we talk about it, guys. And look at this. Odds favorable in a clear path. And I'm going to circle that tail just for grins. And I'm going to go to a smaller chart. And I want to see what that circle looked like. Came back to a mid-band, but that mid-band was in between, right? This is today's lesson. We're going to talk a lot about this. So VC, when I'm talking about ATM strategies, if you're trading crude oil, if you're trading the S&P, I like the 12 stop, but I like it on 2 targets. Because I'm going to give you a trading plan that gets you paid quickly and then helps you develop trust to hold. So 12 lot, 20, 30 target is perfect. And that'll get you in there, and that's fine. And the reminder for you guys is that 12 ticks isn't your stop. It's not an arbitrary number. Your stops go where the market shouldn't. And I want to talk about entries just a little bit more for you guys today, if you don't mind. I hope you don't mind. I went through and I put together some lessons. So let me go back. And we just saw this one. But the small chart price may retrace back to the large triggers. And the large chart price may retrace back to the synthetics. So guys, we create our window inside of those trigger lines. The trigger lines are the correction point. The lines inside of the trigger lines are where we expect the bounce. Sometimes those trigger lines begin to split a little bit. So we're about to go into the KISS plan management, Wayne. Initially, 12 isn't the stop. 12 gives you reaction time to put the market where the market, or to put your stop where the market shouldn't go. Sometimes it's 8, sometimes it's 15. But with that recipe, 4 to 5 ticks above the trigger lines, you'll always know where the correct stop placement is. And then we're going to go into a plan that actually has you getting paid at typically 10 ticks on crude oil or 8 ticks on the S&P, and capturing quick profits and building a little confidence, and then using 16 or 20 depending on the market, because the tick value is different, to capture profits on the second contract. And I'm about to go through that in just a second. But guys, sometimes you have a line inside of large triggers. Sometimes you have a line inside of synthetic triggers. Your window where the market may bounce is kind of twofold here. You have one where it may bounce here, and you have one where it may bounce here. And the reality is you don't know. But the correct stop placement is 4 to 5 ticks above the triggers. And only you can decide whether or not you're cool with that risk. Is that fit your trading plan? There's some people that say, well, Mark, that's just too much. I'm not going to take it. And that's okay. You can choose not to take that trade. But by understanding that price may go to either and understanding where the market shouldn't go, it makes it easier for you to make that decision. Here, your synthetic triggers have absolutely no lines inside of it, no areas, no fibs, no mid bands. And then your large triggers have a mid band, which means that you have that one spot where the market is most likely to continue. This becomes your entry, and the synthetics are almost completely out of the equation there because they don't have any lines in it. So the triggers are where price may return, but the areas are where we expect the bounce. And we're getting these very basic concepts down on entries. And this is a very common one too. Your area is floating in between the triggers, right? It's not in the large, it's not in the synthetic, but guys, it is before the second correction point. It's before the point where we expect price to go on the large chart. Your stop has to go up here where the market shouldn't. If you're comfortable with that risk, take that trade. You know where your stop should go, whether that line is inside of a trigger or not. And you're going to see this every now and then. You'll also see it where both of your lines are above both triggers. You know exactly where your stop should go now. You're going to have a very solid plan for that And again, you can either say, I'm totally cool with the risk because of the advantages, or you may wait for a reversal bar and get a little confirmation, because then your stop will go a couple ticks below that reversal bar. Your risk is established. So I wanted to give you guys these options that are there, because entries, the best of the best entry is an area inside of favorable large triggers. But guys, I'm going to say it 1,000 times. Once you understand the basic concepts, you're going to be able to build a plan that fits your needs. Once you understand these patterns, you're going to be able to find more and more entries, and you're going to be able to understand what your risk should be and where it should go, and whether or not that trade fits your pain tolerances. But in order to get to where you want to be, you have to be able to recognize some looks and patterns, and you got to be able to recognize them fast when the market's moving. And this Chart Reading 101 reinforces the lessons that we just went over, and it speeds up the process of becoming a chart reader. Take 25 pictures each. Do it over the course of a week. Don't force yourself to sit in front of a computer for 3 hours. Most of us can't concentrate that long. But take 25 pictures of strong triggers and weak triggers so that you know the difference between the two. Take 25 pictures of a clear path, and take 25 pictures of termination conditions so you know the difference between the two. So you don't get caught out thinking your path was clear when actually it wasn't. And take 20 pictures of those high probability trend trade entries so you can burn it into your mind and know where your limit orders go. But don't just take the pictures, guys. Annotate with the whys. So the way that we went through together earlier when we talked about strong triggers, when we annotated, where was that picture? There it is. We didn't just say strong triggers. We took the time to write out that the background was green, that the trend was up, that the smalls were above the large, there was space between the two, that it was strong triggers, that it was momentum, that rule number 1 was met. And I promise you, if you take this picture and do this annotation 25 times, you're never going to miss strong triggers. And you're never going to miss weak triggers, right? And you're not going to trade into termination conditions, because you're going to have these things committed to memory, and you're going to be able to recognize them in a moment's notice. So I'm going to give you all these things that I'm sharing with you right now. That's the first one. The second one is the high probability trend trade checklist sheet, guys. Less is more, greed is bad, Andy. The high probability trend trade checklist sheet is designed to help you as you take those pictures, because there's a visual of what it means to have the rules met, the same way I teach them each and every morning. Strong triggers, weak triggers, right? No triggers through, not broken, not a clear path. Small and large through, area broken, clear path. Very cut and dry, very black and white. And then there's that potential to break with odds favorable momentum in windows of opportunities. Windows of opportunities where you're going to be entering this trade, guys. And then the second page is the trend trade checklist. And print this out. Put it on your desktop. Commit to it as a brand new user. Commit to it as an older user that isn't finding the success that they want. I've never had anybody follow this checklist to the letter and do worse than 70%. Is the market coming from a strong top or bottom? What does that mean? That means that termination condition reversed the market. That's not mandatory. You can still trade without it, guys. There's your rules, right? This top one is like a warm fuzzy. Makes you feel even better about what you're doing. But if you have momentum, mark yes, go to the next trade. If you have no terminations, mark yes, go to the next rule. And guys, this is the one that I want you writing on your charts as a brand new user. Area inside of favorable large triggers, because once you can nail that entry, you know where a stop should go. And that becomes the beginning of your management. So go through and write these rules on the chart every time you annotate. And make sure that you're letting the language lead the way. And then finally, I'm going to give you the KISS plan. This is the one I talked about this morning. This is the one that's designed to optimize your chances of success with that high probability trend trade. And guys, this is a stepping stone in your learning journey. Can we get those side by side? Nope. There we go. I'm going to do this. And you're going to get this. This KISS plan is designed to optimize your chances of success. The high probability trend trade is not your only trade. The high probability trend trade is your first trade. The high probability trend trade is your foundation trade. It's the one that wins more than it loses. That's been proven, verified, back tested, thrown through the ringer, and came out squeaky clean. Guys, this is the one that sets you up to learn to read your charts. This is the one that creates confidence through the memory of success. This is the one that if you are struggling as a trader is a great one to come back to get your focus back where it needs to be. And then through simulation, study, class feedback, and continuous practice, you're going to create a plan, guys. You're going to create your plan. You're going to have the Wayne plan, the Gino plan, the James plan. And you're going to have it based on your ability reading the indicators. You're going to have it from the patterns that you're beginning to recognize. And your simple plan for consistency, don't fight the large chart. Fight the small chart all day long, right? Because we have to fight it to get into our trades. But don't fight the large chart. Don't fight the momentum on the large chart, guys. That is the people that move the market telling you which direction they want it to go, and it's going that way with anger. Don't trade into the areas on the large chart. This is where the large crowds, where they are making decisions. And if you can do that, if you can commit to that on day one, I won't fight triggers, I won't fight termination conditions. Guys, you're already doing better than 90% of the world. And you're eliminating about 60 or 70% of the mistakes new users make. Because the easiest way, I love this book, to commit financial suicide is clearly defined in this book, this bestseller written by John Novak, right? Chapter 1, warning signs your friends are in trouble. They're trading against strong triggers. Chapter 2, warning signs your friends are not paying attention. They trade into termination conditions. These are the two biggest killers, guys. And this is obviously tongue-in-cheek. Seek help immediately. I am the help. Nickel coming. And I was just thinking that when you posted it. So don't fight the large chart and define your entry. Guys, give yourself 20 days to pick these entries off. Wayne, it took you 5 hours to be able to find one. But give yourself 20, 30 days. Say, this is a marathon, not a sprint. Let me make sure that I have this down. Let me make sure that I understand it. Let me make sure that I'm reading these advantages correctly, because I know that my chart read is going to take me to bigger and better things. And then once you define your entry, guys, you've got to do something with it. And if you allow your management to be as mechanical as your entries, and Wayne, this goes back to what you were asking about stops and targets. If you let it be so if-then in the beginning, it's going to help reduce a lot of emotion. It's going to take a lot of the fear out. We're going to try and get it real robotic. And your initial stop's 5 ticks beyond where the market should go, guys. That's it. There is no number. There is no, it's 12 ticks, it's 10 ticks, it's 18 ticks. It's 4 to 5 ticks beyond where the market is likely to continue, right? Where the market shouldn't go. In the area. And then once you're in, if it doesn't hit your stop, let me get my picture here. If it doesn't hit your stop beyond those triggers and gives you a reversal bar, your first stop movement is 2 ticks above that reversal bar. And that's why when we talk about confirmation bars, deciding to enter the market on the reversal bar instead of the pullback to the area, you're not in till down here. It's okay. There's a cost for confirmation, but your risk is clearly established at that point. So at this juncture, I'm either going to get stopped out for less. I'm going to take a smaller loss. It's okay. Losses happen. Or it's going to hit my first target. And in the KISS plan, guys, the first target is only $100 away from your entry point. And a lot of times in crude oil, it's not uncommon to hit your first target on the reversal bar that reduces your risk, which is kind of cool when that happens. But once you hit that first $100, remember, we're in this to get paid. That's the whole goal, is to make money. Once you hit that first target, you're going to go break even as a brand new user, as a KISS plan follower. And the $100, guys, that's not your best stop placement. That's not the smartest stop placement, not by a long shot. But you will craft a plan tailored to your personal goals based on your ability to read the indicators. You're going to understand in a little bit of time, oh yeah, a little high impact coming, that maybe you're willing to keep a little more risk, especially if you just got paid. But for new users, get paid, go break even, have absolutely no fear in the trade, and let that thing run to your second target. And it's only $200 from entry. And that's a $300 trade. That's a $300 trade with every advantage. It's a $300 trade with going with the large crowd, not trading into areas, having momentum. I'm going to pull up the S&P and we'll see if that news does anything. So I'm going to give you these things, guys. I'm going to give you right now, I'm going to give you that chart reading 101. I'm also giving you a daily goal sheet and an exit condition sheet, high probability trend trade checklist, the KISS plan, and even a PDF of the PowerPoint that I use to teach the room. All of those just got dropped in the room. So when I tell you that I'm going to give you everything that you need, let's go look. Friday, yep, 11 a.m. Andy, it is coming, but it's an hour away. 11 a.m. Eastern. You were so close, Andy. Thanks, Ron. Everything that you need to be successful with the software you've just been given. You have been given the rules, what it looks like to have the rules, how to study the rules. You have been given a spreadsheet that's going to allow you to study, that has tons of study pictures, that goes over the entries, that talks about the management, that teaches you how to become good with the software. You've been given a plan that you can follow from day one that's been proven to win more than it loses. And ladies and gentlemen, the only thing that I haven't given you is reps. The only thing that I haven't given you is experience, is time in front of the market, time on the simulator. And then once you get that time, that seat time, and that feedback, then you start looking for more. But I always encourage people in the beginning, when you're brand new, let me go to this right here. There's two things that you have to know before you decide to go live. Well, I mean, you can go live whenever you want. I don't tell you what to do with your money. But for people that want to keep their money, more often than not, there's two things you have to know before you sit down and you say, okay, I'm ready. You have to know why you'll enter a trade. Initially, that's defined for you guys as the high probability trend trade. It works itself into momentum trades and high volume area trades, and there's even people that do these jump in trades. But you have to know the rules so that you can repeat it, so that you can test it, so you can verify that your rules win more than they lose. This typically is the easiest part of the equation for people. And then you've got to know why you'll exit. And having an exit strategy is the most ignored part of a trading plan. People rely on their guts and their emotions once they're in a trade, and they focus on these little fluctuations on the small chart, and they stare intently at being up $10, down $20, up $20, and the emotional roller coaster kills them. Have a plan and have it very clearly defined, and make sure you know your rules of why you'll exit. And then commit to having the rules met. I can't stress this enough. Commit to having the rules met. And again, one of the biggest challenges that I see, guys, I'm in this grandmother protecting you mode today, is that if you don't understand the rules, it's okay. You're brand new. Give yourself a little bit of grace. But if you don't understand the rules, you can't commit to having them met, right? And that's an important part of the equation. And your rules are just patterns. That's all it is. The market has a memory, and we've identified the patterns that win more than they lose. So the more consistent I am following those patterns, the more consistent in profits I should become. And it's the process that yields the results. It's not your rent is due, or it's time to pay for the new car, or I've got to go get 18 in at Pebble Beach, guys. Your process is what's going to yield the results. Having those advantages, winning more than you lose. And rules help to remove the emotion that's associated with trading. When you trust your rules, when you really trust that this pattern wins more than it loses, you find yourself not worried about the outcome. And you understand that losses are a normal part of the equation. And the key is that you want to take the right losses. So for brand new users, if I'm looking for a high probability trend trade, I want you to see this. I'm looking for 3 rules on 2 charts, which means really I've got 5 things to think about, right? And then I've got my KISS plan to manage it. Well, as I grow with the software, I'm going to find more reasons that I might exit a trade, that I might pump the brakes, that I might relax. But in the beginning, this is all I'm thinking about. And that's pretty easy for a brand new user. It doesn't complicate things. Once you add one of those potential to break trades, well, what you're doing is you're adding 5 more rules, right? To the 5 things that or to the 5 things that you're already thinking about. So now you're thinking about like 10 things at least. And then it's got a different management plan. So now you're thinking about 10 different rules plus a different exit strategy. And if you're not comfortable here, it's very possible you'll confuse them. And then you get a momentum trade, and that adds another 4 things to think about. And now you're up to 14 things. And if you're not clear on these, things begin to confuse themselves. So get really good at one and then add the second. And that's the easiest way to get to where you want to be. I'm not going to save that. But that's in the room as well. And then finally, this is how we're going to end the hour. And then I'm going to go run a lap. Where is it at? Daily goals. This was dropped in the room as well. And I think that this is such an important concept for newer users, especially if you're not already making 6 figures a year, which is okay. I get a lot of people in here that don't. I certainly wasn't making 6 figures when I started with Nexgen. I was recovering from a spine surgery and actually making 0 money. So it was easy for me to focus on trying to make all the money instead of the process, and I killed myself doing it. If the best you do every day is $100, guys, and I want you to think about this, just $100 a day, $50 a contract, that's an extra $25,000 a year. If you double that, you're at $50,000, right? It only takes $200 per contract a day to get into the 6-figure range. So let your process be why you get paid, and then more importantly, get paid. And if you ask anybody in this room, and I'm going to raise my hand too, who's been in a trade and been up $400 or $500, and your brain tells you, don't get out, move your stops, it's going to go further. And you exit that trade maybe with $20 or even losing $100 because you hoped that it would go. Guys, this is one of the biggest problems because it means that you don't have a reason for exit. We've all done it. And if you haven't done it, then you're probably fudging about whether or not you did it. One of the great things about Nexgen, one of my favorite things about Nexgen, is that if I were in a short trade, I could see this blue line. I could see these yellow dots before I ever got there. And if you've ever taken an exit right here, you feel like a freaking rock star before that thing goes back up. And it's crazy. You know where the market may stop. You know where it may bounce. There's nothing wrong with getting paid right here. And if the area breaks, look for another entry. But getting paid is the goal. I can't stress that enough. So until you're comfortable getting paid, not everybody's comfortable making $1,000 a day. Until you're comfortable getting paid, just get in the habit. You know what? I'm going to make $300 today because it's easy. And then I'm going to shut down and I'm going to go play golf. And then I'm going to come back tomorrow and I'm going to make that same $300. I'm going to teach myself to get paid. I'm going to teach myself to stop when I'm ahead. I'm going to teach myself to not give it all back. And guys, that's a big part of it. The psychology of trading is going to be the hardest thing. The patterns are easy. The entries are easy. The management becomes easy. Sitting on your hands and doing absolutely nothing when there's nothing to do will be the hardest thing that you ever do with the software. So That's my first hour. It's the same hour every day, guys. If you go back to YouTube and you look at everything that I do, it's the same hour every day. Why do we insist on lines inside of triggers? Because once they're on the wrong side, guys, look at this nonsense. This is what can you guys see it? Everybody that thought they were going to go short at that mid band got run over. Why? Because I don't have areas inside of favorable large triggers, guys. That language becomes very important. Very important for the new user on entries. All right, I'm done being preachy. I'm going to go take 5 minutes, guys. When I come back, we're going to start to look at the charts that you guys posted. There's a couple things that I want you to think about. Let me see if I can find. I used to have a thing here. Hold on. Boom, 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 boom. All right, I'm going to share this before I go. I'm feeling wordy. So guys, the key is to everything that I teach is having a foundation. Everything is about having a foundation, understanding the basics, and then every day, every week, compounding a little bit, right? And if you don't build a solid foundation, your castle sinks into the swamp. You build another one, it sinks into the swamp. Build another one, it burns down, then it sinks into the swamp, right? We've all seen Monty Python. So for you new users, I blanket with very conservative rules. For you brand new kids, it's all about recognition of advantages. That's all we're focused on in the beginning. And a solid plan that optimizes your chances of success as you learn to read your indicators. So for you new users, all terminations are bad. All lines on the chart trading into them is just death. It might as well explode and take your legs. Guys, no momentum is bad, new users. Areas beyond triggers are bad. And blanket rules increase the likelihood of success. Blanket rules are going to help create your confidence. Blanket rules are going to keep you out of bad trades. And they're not always bad. But until you have the experience to know when to use exceptions, it's just safer that way. And just like anything, guys, the more time you spend with it, the more you're going to see. This is going to open doors for you. But one of the biggest challenges, and this is why I'm doing it before we get into the charts, is when new users see older, more experienced users taking trades that don't fit the rules, and it creates confusion. Why did they trade into termination conditions? Why didn't they have momentum? They're breaking rules. Why can't I break rules? Guys, the short answer is you don't have the reps to know when it's okay to break rules. Learn them like a scholar, break them like an artist, right? And then you grow, and now because you got some time watching patterns, you can trade into this fib and manage it because of the other advantages. And with a little less than perfect momentum, you can still get in and manage. And your entry becomes a little less rigid because of the time that you spend in the market. Your repetitions open doors. But you've got to learn the process that yields the results. And the results seem to follow. And that's where the KISS plan comes in, guys. If you follow that, if you keep it basic, don't worry about keeping up with the Joneses. You can find an extraordinary level of success. I've watched it over the years repeatedly. I've watched people get funded in those prop firms in their first 30 days with Nexgen by keeping it simple. And the further that new users deviate from the simple, the longer it takes them how to be comfortable with pattern recognition. This is a gospel truth. The more you try to find everything, the less you're going to find. The more trades you try to create, the less you're going to find. You have to be okay with doing nothing. So question everything, guys. Question everything. If you don't understand something, force me to clarify. I love it. It's my favorite part of the class is when you guys ask questions, especially the ones that make me think. I want you to learn, but you got to give yourself a little grace, guys. It's okay to be new. It really is. It's all right to be new. So when I come back, we're going to talk about momentum, clear path, and entry. And we're going to do it on every chart, no matter what kind of trade it is. And every chart is a potential lesson. And if I take your chart and I make a big shining example about it for one reason or the other, whoa, I just lost Ninja Trader. That hasn't happened in a long time. Guys, be okay with it. Be okay with it. Feedback's what gets you to where you want to be. So while my charts reload real quick, guys, I'm going to go, my wife's working from home. I'm going to go high five her and interrupt her online class that she's teaching. And I will see you guys in about 5 minutes. Go stretch your legs, everybody. See you in a few. All right, let's get back to work, ladies and gentlemen. I'm going to scroll up to the very top of the chat box just for you guys that are newer here. This is what I have to do to get back to the pictures that you guys have posted. So if during the day I miss a picture, if I accidentally miss a question or a comment or something that needed attention, just make sure that you tell me so that I can help out there. And we're going to get going. Yesterday afternoon, Mr. Flowers said, you know what, Mark? I took those lessons yesterday that you talked about and I incorporated them into taking a win after class. And there's not a lot of things that make me happier than this, to be honest with you, is when somebody presents a picture in the room and we say, hey, here's a potential challenge and this is what we're looking for. And then you come back and you say, check it out, Mark. Strong top, termination that reverses the market. And then odds favorable momentum, rule 1 met. Look at this annotation, guys. Rule 2 is not a clear path. It's a cyan divergence, and this is a 50-50. The smalls are through, the large are not. It only has the potential to break. So no divergence, pulls right back to an area inside of triggers, right? No lines in this one. Perfect entry. Stop placement was perfect. And Mr. Flowers gets paid on this trade. What a great trade. Easy 175. Doesn't really fight anything. It's trading with direction. It's trading with momentum. And then, Paul, are you in here? I think you are. Was this trade easier? Did it feel easier? And I always like to ask this question because I find that when I know I'm trading with advantages, I'm less likely to be jumpy. I'm less likely to move stops. I'm less likely to adjust my targets because I'm talking about advantages. And I love this trade. I love everything about it. So virtual high five for you because these are the ones that make trading effortless when it looks like this. So good job. All right, we're going to come up and let's find the next one. Whoops, I went all the way to yesterday. All right, let's take a look. Odds favorable momentum, that's amazing. What a great advantage. That leads the way. Strong triggers, guys. No termination conditions. Smalls and large are both above the fib, and there's room to the target. Price pulls back directly to a line inside of triggers. 100% rules based, and it's easy money all the way up. And then, so Joe, I want you to tell me why this was sad and why it didn't follow the rules. And then there's just a picture that is a termination condition. All right, it's the Pete Show, 4 in a row. I'm just going to click on all 4 of them. This is one of those times where I tell you guys, some people are in a different place than you. They've spent a little more time. Pete's one of those guys, so check it out. First trade of the day, warm-up trade. I love that you have a warm-up trade. Got to limber up a little bit. Odds favorable, smalls above the large are wide. I love it. Clear path after the fib. It's not a clear path, but once the fib's done, it will be. Pullback at the mid-band inside of triggers, and target was the fib. The fib stopped printing, 40 ticks. Wish they were all this easy. Amen. Wouldn't it be great if they were all that easy? And then Pete, you know I'm going to say it, right? Why can't they be? Why can't they be that easy? They can't all be that easy. You just have to wait for them to be that easy, right? James, just curious, the more users that Nexgen gets, will this get easier because everyone here is buying, selling in the same area? You'd guess that would help momentum. James, I've heard this conversation before, and actually to the other side of it, where people are like, oh, if everybody's trying to do the same thing, not everybody will get filled. If you look at the daily volume of the S&P, And I think I have a picture of it from today because I was doing a comparison for a friend of mine. Um, Let me go to the library here. So if you look at the daily volume of the S&P, and this is pre-market, that's the micro S&P. There's 161,000 people. That's the volume, and this goes up to over 500,000 during the day. The Nexgen pool is such a small pool. We're so insignificant. We're a drop of water in the ocean. And I think Ron just said it too. We don't have the impact. As much as we like to believe that we do, we don't, which is why we trade pullbacks instead of try to get in at the top of them, because we define where they're likely to fail. So, yeah, I don't think it won't mean a thing, right? It won't mean a thing. Great question, though. I've heard it asked for the last 20 years. All right. Pete, odds favorable momentum and a clear path. Sunday's cool answer, no. And it doesn't work, right? It just doesn't work. And then, Pete, I'm not sure if you know this lesson. And guys, sometimes the lessons are for the class and sometimes the lessons are for the individual. And then, Pete, this was a good one for me. And I've got a little blog on it. And I'm going to give it to you. Let me find it. And this one's called Second Divergence for Managing Your Trade, Pete. When I get a second lower divergence, I'll use this very often as an exit condition, but I will re-enter if I get a reversal bar. And that's what that little Word document that I just dropped in the room is. This ultimately becomes an exit condition for me if I'm in a trade. If I were in at the mid band in the second divergence prints, I'll exit my position. But because of this look on the large chart, I'll force it to give me a reversal bar for re-entry. So very often, if I get a second lower divergence, I'll choose not to just get in. This is one of those times where I'm a big fan of the reversal bar. And I don't discuss that much. It's a little more advanced management, but it's very relevant to what you did here, and it might have kept you out of that one. And then just what awesome recovery time. You're like, wait a minute. This is momentum, and guys, this is the momentum trade right there. And you freaking nailed it. And Wayne, you may appreciate this one. Back when I was racing motorcycles, guys, I had someone with expert plates tell me, he goes, the difference between an expert racer and a novice racer is rarely the lap times, but it's how quickly they recover from mistakes. How quickly they come back from adversity and get back in the game. And Pete, that is one of your definite strengths because you're always looking 3 steps ahead. And when this one doesn't work, you know exactly what your course of action is. And I think that is experience, guys. And that's what repetition gets you to. To be able to take that loser and rather than pine about it for an hour or call the market names or wish that you were in a better place, you simply capitalize the other direction. Just awesome. Triggers rolled up. Once again, it's those separated triggers. I love this, right? You still call the market names? I do too. Termination, odds favorable, and guys, this only has the potential to break. You'll notice that the large triggers are up here without a line. The synthetics are down here without a line. And those lines are floating right in the middle. And Pete says, hell, I don't know if it's going to go from here or if it's going to come down here. There's absolutely no way to know. And he insists on a confirmation bar. He says, I will wait for the market to head in the direction. And then he enters after confirmation, and then he rides that trade with these advantages. And once again, guys, this is a great way to do it. These confirmation bars, when things aren't perfect, it costs a little bit, but it works out. And for those of you that wonder why Pineski's playing bingo in here, guys, that's what we yell at the top of our lungs when we have another winner. It's a lot of bingos, Paul. And then there's the best of the best odds favorable. And it pulls right back to support inside of triggers. And blew through the midband and then reversed. Big momentum on the large chart. Just jump the fudge in and take it up to trouble. Nicely done. And then right there at 70, you knew that that was a good stop spot, right? Perfect. Nice trading, Pete. I like it, Paul. Good job. Guys, Paul was one of the guys years ago when I used to teach a 101 class in the afternoons. He would come in, and he would come in with 20 pictures from Market Replay. Every one of them annotated with an awful lot of questions. And that participation paid dividends for him. You'll see it when we start clicking on his charts. Pete again. Beautiful large chart, down, separated, best momentum ever. Once again, those split triggers, and Pete's willing to pay for confirmation and gets paid at the fib. Amen. Telling you, Pete, I'm going to give you the mic one day. Let you teach some people stuff. And then VCP, everything is down. The momentum is great. And you're getting in at 69.49, right about here where the smalls break but the large don't. And you're taking that beautiful little snapback right to the fib, right inside of triggers. Boom, boom. Did you actually take this one, Wayne? Or did you just go through and mark it up? Just marked it? Cool. This is great. Absolutely great stuff. No, Belt, I'm not sure about that on the LLC. But I think maybe if you are trying to apply both as an LLC and a personal, that may send up a red flag in the system, it seems. I don't know why it would, but that's just a guess. I'm not sure. I would call them and make them talk you through it. All right, guys, let's see what we have. Everything says up. Path is clear. And then Paul gets in on a little momentum style look. Everything says up, and he's like, I'm just going to get in. Gets paid at the first trouble spot. Once it goes past the trouble spot, he's got absolutely nothing to lose on this trade. $110 locked in. And I believe he said bingo. All that momentum carried it right to the target. Erla, momentum, clear path. The entry is on the wrong side of the triggers. Let's blow this one up a little bit. Erla says, yeah, I'm not sure if the midband's going to hold. It's on the wrong side of the triggers. And I'm just going to put words in Erla's mouth. He may not. So he waits for the reversal bar. He waits for it to start going up in the direction. And it makes it easy. Erla, beautiful trade. Beautiful trade. And then Paul, everything says down. The momentum isn't there. There's nothing inside of triggers. And this is experience, guys. This is Paul saying with this look, with this clear path, with this midband, everything's cranking down 30 bars in a row. I'll just sell that midband until it quits working. Nice trade. And guys, if you have any questions about anybody's charts, please post them. All right, Andy, weak top, 50-50, right? Smalls are through, large or not. You take the quick little pullback right to the fib. You get paid. You get paid. Man, I could teach a class with this one. And then odds favorable, clear path. You get in a little bit high, your risk is established, and you give a little bit back. Second lower divergence. Second lower divergence is a great exit condition. Good job. Manage with the small loss. Guys, small losses shouldn't affect your psyche. Small losses are a normal part of it. And then looks like the exact same trade here. So Pete, exact same lesson on second lower divergence. Great entry, established risk, that second lower divergence. And that's where if you wait for the second reversal bar, virtually no risk. And it just didn't go. It just wasn't willing to go, and that happens sometimes. I know it's frustrating when you guys lose, but all losses aren't bad. All losses aren't bad, guys. He took the right loss. Odds favorable, clear path. Only 2 divergences, in on confirmation, virtually no risk. Guys, it's okay. That's just a part of it. It's a cost of doing business. Nicely done. And then Pineski, it's just fun to say. Everything says down. The market is screaming. He gets in at the mid-band right inside of favorable large triggers. Gets paid. It gets you break even. And then you re-enter and you get paid and you get paid. And guys, when I tell you that you might adjust your plan a little bit, and Paul knows exactly what I'm going to say here, and he's probably just going to tune me out. Ooh, hold on. Let me try this again. Because I want both. When my large chart looks like this, that exit is literally at a mid-band inside of favorable large triggers. That exit is literally an entry point. And in the moment, sometimes it's difficult. And I know that Paul has a plan that says go break even +1 when first profits are taken. And that's one of the ways he makes sure that he doesn't keep giving it back. And that's brilliant. And for you guys that want that bigger move with all that momentum, you'll find that putting a stop where the market is most likely to continue rarely works out for you. Because they know there's these fluctuations on a small chart that have that potential. So as you develop a management plan, that's one of the things that you may keep in mind. Don't put a stop where the market's likely to continue. And if that's the only place where your stop is, sometimes it's better just to get paid. But that's up to you. That's stuff that you guys will work through with a little bit of repetition. Paul, once again, everything says up. The momentum is insanely good. You don't know if it's going to come to this line or that line. So you wait for confirmation, which means that your risk is established, which means that it's an easy win. Absolutely beautiful, Mr. Flowers. I'm inclined to believe that you're listening in the classroom lately because you keep incorporating these lessons and getting paid. Nicely done. I hope you're around to hear that. But you took the lessons, right? You know that it could go to either, so you wait for confirmation. It's not perfect. My money's worth it. That's what a great phrase. This isn't perfect. My money's worth confirmation. My risk is established because of the reversal bar, and you get paid. Great job, dude. And now it's rinse and repeat. Now you have to convince yourself that trading like this is the only option for you. Now you have to convince yourself that your money is worth these great entries every time, that your money is worth that adherence to rules. And that's it. That's where you turn a corner. But a couple good ones in a row really restores your faith. Paul, everything says down, 50-50, 1 divergence, perfect entry, profits taken, not willing to lose. Beautiful. What a great trade, Paul. Maybe Paul should teach this class. I'm going on vacation. All right, Kurt. Odds favorable? Not quite. Small triggers are entering. We're right at the tail end. Clear path? Absolutely. Entry inside the favorable large triggers, above the 1-to-1. Stop loss 5 ticks below bottom trigger line. Should I have placed it below fib support? Kurt, are you with me, brother? Cool. 1, 2, 3 divergences in the same price range may terminate the trend. You remember that lesson from rule number 2? And that's okay. When you're trading in the moment, you might. So one of the other things that I want you to see, Kurt, is when you only had one divergence, that was one tick from support inside of favorable large triggers, which means that this was your entry. And from this entry, you probably made your $300 before that third divergence prints. Does that make sense? And this is one of the great things. School drop off. Yeah, you were up early today, Paul. Since you have to leave, let me bounce. Again, mid-band outside of triggers. Little dangerous for you new users. When you are experienced, you'll know when that makes sense. Nice one. But I think the best lesson here is if you catch the best trade, right? If you catch the first, the more the market fluctuates like this, the less likely your trade is to go. And you'll find that the winners run fast, guys. And if it takes you 3 pivots and pullbacks to decide that you want to enter, by then it's probably over and you may not notice the divergence. And I don't know, maybe you weren't in front of the computer here, Kurt, at this one. But that's the one. That's the one right there. If you get in on the first pullback, you can usually make money even if the trade ultimately fails. I hope that makes sense. It's a good look on the large chart. You may have been away, no worries. So once I start seeing multiple divergences, that's gotta work into your radar a little bit. Because 3 can terminate the trend, and 3 is exactly what it did. It pushed you below everything. And in response to should you have placed it below Fibonacci support, again, I like using pictures, guys. If the market's all the way down here and all we're looking at, let me do this one first. Is that really where you want to be in a long trade, Kurt? On the wrong side of fibs, on the wrong side of mid bands, right? There's just a point when you get so far below those triggers, it turns into hope, and it's better to take that little hickey. And I think that if you would have noticed the third divergence, you actually would have been out pretty close to break even on that one rather than taking the loss. And that's just where experience begins to factor in. That's where the more time you have, the more seat time you have in front of the market, the faster these reads come in. The better you know your rules, the faster you process whether or not they're true or not. And I guarantee after this conversation, you're going to have 3 divergences on your radar, which is good. And that's one of the great things is sometimes I just give you guys a little something to think about that you weren't thinking about. And it can change the whole dynamic of your trading. Good stuff. Let me see where we're at here. Andy. Ron, I almost missed this one. Everything says down. Back side of the price bar clears the area, which means that, and Ron, I'm going to go a little further on your trade today. Steve Diego, are you listening? If you don't mind, I'm going to give some secrets away. Guys, one of the things Ron has been very generous with is annotating his charts with his rules. And his rules are not the high probability trade rules. And I've learned a tremendous amount from him. And I've done a tremendous amount of study on this trade. And I love it. And it used to give me heartburn because he didn't wait for pullbacks. But it's brilliant. The back of the price bar clears fibs. What does that mean? That means that all of the price action has gotten away from where decisions are made. So once price gets beyond, the market's more likely to continue past. Why we don't trade into areas, but rather than from. And he does the same thing. And guys, you don't know that it's clear until all the way down here. So he makes sure that he has rooms to get to his target. And that was a fib update. That's the one that gets Parker. And he jumps in. And guys, this is the most important thing. When you talk about a trade that is based on nothing more than momentum, when you talk about a trade that relies on not having fluctuations in the market, the longer you hold that trade, the more likely fluctuations are to happen. Which is why you'll always hear him say, base hit. Base hit, guys. Moneyball, base hits. Get on base. Because if you get on base 4 times, that's a home run. And the idea that you have to make $5,000 every trade, the idea that you have to make $20,000 a day, as you could do it with base hits. And this is one of the most brilliant ways to trade. And I'm such a big fan of this. And I was so anti this in the beginning. And Ron will tell you, I was like, Ron, I've got a bottle of Tums with your name on it. Because I didn't understand it. And then when I took the chart read, it's brilliant. And it's a pretty effortless way to trade. And I'm actually teaching a friend of mine that wanted to learn the software. This is all I'm teaching him right now. Just to see if somebody can pick up on this pretty quick. So, yeah, you got some guff for it. There's no doubt about it. So, public apology for any of the guff that I may have given you. But you get set in your ways. Look at this. Belt's paying attention. Jump in when it clears, get out at a fib. Isn't that awesome? Let it clear, get out at a fib. This is 100% momentum trading, Gary. If you don't have momentum, you probably shouldn't be in this trade. It's 100% momentum trading. And what does that mean? That means that if you can't identify odds favorable momentum, how are you going to be successful with this trade? If you don't believe in your heart that these fibs can cause problems, how are you going to be successful with this trade? This is why we lay a foundation. And once you get those basics down, the sky's the limit. Yeah, Joe, I gave you a review. And I told you, write down on a piece of paper what was sad about that trade. Write down what was sad about odds favorable momentum, clear path, and a pullback to an area inside of triggers. And tell me how this doesn't fit the rules. And tell me why the hell you're beating yourself up for solid, successful trades. That's what I said. It's a beautiful trade. It's a perfect trade. I could teach a class with that trade. And you called it sad. And I can't figure out for the life of me why. So I'd love a little clarity. And then maybe I can help you a little bit. All right, Erla. It's a 50-50. Clear path. Everything is down. Let's see what your small chart looks like. You take the trend trade. And you get out at trouble. And then you get out with a reversal bar. And then you say, hey, you know what? Another trend trade. Let me get out of trouble. Let me get paid. And then you're like, oh, man, not another trend trade. And then down it goes all the way to the fib. And in, what is that? And in 4 minutes, Erla has hit all his goals and he's done. I don't want to give you a hard time, Joe. What I really want is I want you to stop giving yourself a hard time. Erla, absolutely gorgeous trading. So I posted this at the beginning of class as well, guys. And you guys know me, I'm artsy fartsy, and I like pictures, and I like talking, and I believe in language. And then Wayne, this is the one that you inspired because you got me talking about motorcycles, guys. Target fixation. What is target fixation, guys? Target fixation is this phenomenon that occurs when something is so focused, someone is so focused on a target or a hazard that they increase their risk of colliding with it. And I'm going to copy what I wrote as well. So target fixation, guys, I know it from motorcycle racing. And I know that Wayne appreciates that one. But it's true for trading. If you're focused on the problems, if you're focused on the challenges, if you're focused on what it's going to do to make you lose, yep, following your bomb all the way to the target. Yeah, they mentioned that as well when I was researching this, Gary. I didn't know that was a thing until today. But what are you focused on? And it won't let me copy the text, so let me take a picture of it real quick. And guys, there's a reason that I do this. I know you guys find it hard to believe, but I have made every mistake that you guys will ever make. I promise you, I've made every mistake that you'll ever make. So if you're focused on losing, if you're focused on problems, failures, etc., you're not focused on what it takes to win. You find what you're looking for. It's true. It's like the old Henry Ford, guys. Whether you think you're right or you're wrong, you're not mistaken. What you think is what you're looking for. And this is why it's so important to focus on the patterns that produce results. Guys, commit them to memory. Refuse to deviate from them. And relax and let the market tell you that it's time to trade. And if you can't hear it, if you can't hear the market telling you that it's time to get into a trade, then you need to study. You need to study more. You don't have it committed to memory. And there are thousands of ways to make money. Every day I teach the most basic approach with the fewest rules, right? The fewest things to focus on. And it's designed to give you a trade that's testable, repeatable, is proven win more than it loses. Guys, build your foundation. This is a marathon. Focus on the advantages. Don't focus on the things that are pissing you off or making you sad. And when they're present, trade. And I think that this was such a good reason, a good thing for me to listen to or to think about today, was that target fixation. And Joe, you say I make it look easy, right? Of course I do. Do you know why? And guys, I'm gonna show you the man behind the curtain here. Are you ready? I'm gonna show you why this is easy for me. Let me find a great example here. That's just the easiest of the easy. Let's use this example. Guys, is there anyone in the room looking at this picture that's not moving? Anyone that's spent more than a week with me? Is there anyone without the fear of losing, without the anxiety of watching a moving market, without having to hope that you get your rules right in the moment? Is there anyone in this room that doesn't recognize the momentum in this picture that isn't moving? Anybody? Because if you don't, then we need to have a lesson on momentum, right? And that's okay. Is there anyone in the room with this picture that is not moving, with no fear of loss? Is there anyone that doesn't recognize that price has not reached an area, or that your trigger lines have cleared the previous area and the path is clear? Can anybody not see that? With no threat of pain or suffering. And now I've got as long as it takes me to look at triggers. I've got as long as it takes me to identify the only line inside of the triggers. And I've got as long as it takes me to say I have momentum and a clear path and the entry is from a line inside of the triggers. Pretty cool, right? Joel, this is why it looks so easy. Because there's no fear. I'm not in a trade. I'm not worried about anything. I'm just looking at a still picture, and I'm taking my knowledge of the rules and I'm just projecting it onto your chart. That's it. Of course this is easy looking, guys. I'm not in a trade. I don't have to make any decisions. You had to make a decision from 1107.5 to 1108 on whether or not this was the right entry. And you had to make the decision on your management over the course of a minute and a half. Does that make sense, everybody? And this is why every day I tell you guys Study these pictures. Commit them to memory. Know exactly what it looks like when you're not worried about a trade, right? Know exactly what it looks like when you have no fear of losing. Know exactly what it looks like when you're not worried about the money. Scroll back. Trading is the worst way to learn to trade. Studying trades, studying patterns, that's how you're going to get to where you want to be. So guys, I can look at every chart that you present me and know exactly what's going on that chart because I've got 11,000 pictures of study time underneath my belt. This is why every time you take a picture, you have to annotate it. You've got to get those visuals clicking with your brain. This is why you have to describe momentum on every chart. This is why you have to talk about the clear path. And guys, you're not doing this when you're in a trade. You're doing it after the trade. You're policing yourself. You're making sure that you did it right. And if you didn't, then what you have to do is talk about what may have went wrong. Because if I take a minute, and Joel, I'm just going to beat yours up here because it's such a pretty trade. If I write split triggers, only look, can't follow rules, what kind of bullshit is that? What is that teaching me? What if I type traded from an area inside of triggers? I had one freaking line and the rules say go from there. My stop is 5 ticks below the triggers. So instead of beating the shit out of yourself because you think you did something wrong, go through the rules, write them down. Because what you may find is that you're really freaking good at this. You just keep convincing yourself that you're not because you're not going back to those basic rules. All right, there's my soapbox for the day. So don't waste your time telling me you suck, guys. If you think you suck, write it on your chart. Show me where you broke your rules. If you can't do that, guess what? You probably don't suck. Gary, everything says down with the best momentum. Oh, missed the easy pullback to the mid-band. Screwed up, missed opportunity, got the HVA, triggers crossed. Right on. Gary says, I missed the easy one. So I went to my other chart and found a way to do it because I've got the experience reading the indicators. Can we do a little Exhibit A here? Sorry, guys. Sometimes I get a little soapboxy. Can I show you guys something amazing? Does this right here, odds favorable, clear path, pull back to a mid-band inside of triggers, compare this chart, these two charts, and you're probably looking at more like that, right? Compare these two charts with all of this shit. Isn't this easier? Because, guys, that has you in at, what, 60? And it goes $370 worth of profit all the way down to that red line. You don't need all this stuff to be successful. And if you're not successful with all this stuff, well, then it may be distracting you. And Gary, you did a great job of using this chart, right? But focusing on all of this kept you out of the easiest trade that you'll ever take. And Gary, I'm not worried about you. You spent a lot of time studying and participating and doing stuff. But guys, more isn't always better. Better is always better. All right, Pete, there's the trade. Odds favorable, everything is down, potential to break, split triggers, so you wait for the confirmation, and you ride that thing all the way down to the trouble spot on the large chart. Absolutely beautiful. What a great trade. Nicely done, Pete. All right, Wayne, let's see what we got, brother. Okay, we saw this one already, and I think you even told me not that one. Let's look at this one. Jump the gun. Actually, man, can we talk about this one? Another time when I can find all sorts of praise when you guys think you made a mistake, right? So check this out, right? Odds favorable clear path. Large chart is 100% rock star. Do you get that one? You didn't mention it, and I'm assuming because you took it as an assumptive there, that you do have odds favorable momentum, that you do have a clear path. So let me show you something cool. And this is kind of a page out of Ron's book. Clear the area. JTFI. If anyone needs to know what JTFI means, send me a private message. So you got in with nothing but momentum here. Does everybody see that? And Gary, this kind of answers your question on the momentum trade. This is nothing more than strong triggers and just jumping in. Everybody cool? Yes? Here's the awesome thing about these indicators is as long as you don't close on the other side of these triggers, it's going to continue down. So Wayne, your exit right there at break even is beautiful. The momentum's gone. You're on the wrong side of the momentum. And then it just turns into the trend trade. These momentum trades, when they fail, typically become trend trades when the large chart looks like this. So you took a shot, didn't work out, no harm done. Then you took the best trade ever and you moved your stop arbitrarily. And the cameras behind you in your office said, hey, he did it. Let's go stomp his ass and then go down. And then you do the exact same thing here where you just jump in on the correct side of the small triggers. And as long as you're on that side, man, it's going down and you make your money. I love everything about this chart. And you know what? I could probably go through my own personal pictures and find 50 charts that look exactly like this. In with momentum, it fails, I take the trend trade, and down I go. So, dude, I'm telling you, this is better than you think it is. But the thing that you guys have to understand is that this is what makes that work, Wayne. This is what makes those trades that aren't high probability trend trades have a better chance of winning. That's what I want to get across to you guys. Once you know odds favorable momentum and a clear path, you will be absolutely floored at what you can pull off in the market. That's why we learn the foundation. That's why I teach the high probability trend trade. You guys want to see if the high impact news does anything? So we'll get back to pictures in a minute, guys. I'm going to take a sip of water. And you know what? We've all chickened out, Paul. And just let the ATM work, especially on simulator. So when I went live the first time, guys, I lost horribly. I was a smart mouth teenager in a whole bunch of biker bars getting my ass kicked. And when I went back to the market, when I went back after these losses and I learned how to do things, I could take the perfect entry. Yeah, we're about to see what happens here, Belt. It's because we're not in Canada. These aren't Canadian markets, Andy. So when I came back to trading, one of the things that I did is I would take those perfect entries. Because, guys, I'm telling you right now, I filled out about 800 slots on my spreadsheet after I had my first failure. Here we go. It's winding up. And then I would take the perfect entries. And I chickened out. And I would take 20, 21 trades in a day. And almost every entry was beautiful. And I would end the day up about 18 ticks, which meant that I was down on commissions. That's a pretty good news response. Not crazy. I wonder if patterns work, even during news. Everything says up, the path is clear, and I've got one line at the base of those triggers, and now it's out, so I'm not going to do it. But that's normal, guys. Chickening out is normal. Chickening out is a natural part of the equation. You've got to annotate your charts and talk about it and why you should have stayed in that trade in order to learn how to not chicken out, right? So for you, don't move your stops so quick. You had virtually no risk on the trade, right? Let it at least get to trouble. And then once it cleared trouble, you did the same thing. And I love this. I love that you did that. So every picture is an opportunity to learn, and this was a pretty good one. And Paul, we saw yours. Lenny, what's going on, man? Nice to see you. Everything says up. And you go short. With the large triggers up, with the synthetics up, coming right off of support. Why? Help me out, Lenny. Why were the odds favorable for a direction change with this look? Kenny, as soon as I can read my indicators fast enough to make a decision. I feel like you're not giving me enough information. Were there 3 divergences? But didn't it look like it was turning there, Lenny? So this is one of the, I know, right? I'm glad that you said that. It sure looked like it was going to turn there, didn't it? Okay, so small chart had 2 divergences. That's your third divergence right here. Is that right? Cool. So small chart had 2 divergences. It's coming off of support. Every trigger line is up. And you go short from the middle of nowhere, hoping that it goes down. And I'm not beating you up. And this is the stuff that my brother made me do. So check this out. What does large triggers clustered mean? What's the advantage of clustered large triggers? My brother used to say, write a plan for the picture you just showed me. Does it really? Okay. I need you to teach me what you see. Large chart says up. Large chart, small triggers up. Large chart, large triggers up. Price coming from support. Small chart coming from support. Large triggers up but flat. Synth up but flat. No areas for entry. Go short while price is going up off support. And I'm telling you, Lenny, my brother used to make me do this, and it aggravated the ever-loving crap out of me. But when you stop after the fact, and this goes back to the reason annotation is so important. If you go back and just describe what you see, Lenny, does this feel like a high probability scenario? It probably doesn't. No. And that's okay, because if you didn't take this trade, if you didn't post this trade in the room, we wouldn't have the conversation about how you're fighting everything on God's green earth. And the cool thing is, and someone told me that it's scary how quickly I pull pictures out of my ass for lessons. I'm going to show you a cool lesson here. And you're going to like this one, Lenny, because this is pretty cool. So when everything says up, hey, what's up, C-Dub? When everything says up, you begin to form an opinion that this area may hold, right? And that's exactly what happened. And I'm not knocking you, because it's weak triggers right at an area. And you're starting to say, man, this could hold. I might need to start thinking about going short. Totally normal, natural thought process, because we want to be first. If that market's going down and I'm in at the top, oh my God, I'm going to be rich, right? So this picture was developed because you're not the first person to try to do this. This price right here, and I want you to see this. I'm going to take a picture of a picture. This is a lot of fun. This is where I form the opinion that the area is going to hold, right? And then I get stopped out right here. And then maybe I form the opinion that the market's going to hold again because it's aligned. But notice that all my triggers are up. And then I get stopped out again. And then I form the opinion that it's going to hold one more time for whatever reason. And I get stopped out again. And this is such a normal thing. And the one thing I want you to see, Lenny, triggers up, triggers up, triggers up. Do you see it? Here's something pretty kick-ass. Once those triggers roll, once everything actually says down instead of I hope it goes down, this price is the exact same price as that price. The only difference is you stay out of the fight. So when you think that your large chart is going to stop the market, let your smaller charts confirm it. Whether it's a range chart or whether it's whatever, right? But see how the triggers are still going up? And they're still going up. And I would wager that somewhere over here, everything rolled if it was going to roll. And that's where the market started pushing down. $837. I don't have the same look as you. Was that today? In the ES? What time zone are you in on your chart? Oh no, that's crude oil. That's not the ES. My bad. That was crude oil. My bad. It is, isn't it? Well, I wouldn't say all over, Kurt. Which chart are you looking at? Small charts, clusterfuck, right? Oops, sorry, pardon my French. I don't know. I've got a pivot here, and then a huge run down, and then a pivot right into a mid-band. Large triggers don't follow, and now it's down. I wouldn't call that pivots all over the place. It probably feels like it in the beginning when you're learning patterns, but that's a push down that didn't make it to a key area. Yeah, because the market's a huge fight, right? So there's a pretty good chance, Kurt, when it comes not from an area, that this is exactly where the sellers wanted to get to. And when they didn't get there, when the buyers tested the water, your rules said don't go long yet, and sure enough, they're pushing down. So let's see how they react here. You're just seeing the fight in the market right now. Do you know the idea of a strong top or a weak top, strong bottom? When it comes from an area, it's more likely to continue the other way. When it pivots from the middle of nowhere, a lot of times you'll get continuation down. Because these guys know where the fibs are, guys. The people that move the market, they know where these key areas are. And when I have a weak bottom, that mid-band's more likely to hold. When the large triggers don't follow, it's even more likely to hold. And when I can see that blue fib looming in the distance, man, what a great target. Pretty cool, right? It's just patterns, guys. Over and over. It's just patterns. This stuff's fun. I hope you guys are having fun. Lenny, does that make sense on yours? Sorry, I got distracted. I'll open up crude oil. We'll go take a look at it too. But I think that one of the things that the accuracy of these fibs do for us is they start to almost put us in a position where we make opinions, where we form opinions. And those opinions become a little detrimental sometimes because the opinions are just that. They're just opinions. Great lesson. An awesome picture. Thank you for sharing that. Because these are the lessons that everybody needs to hear, not just you. Ron, everything says down, price clears. It just doesn't get any better than this, guys. Once you understand momentum in these areas, opportunity. Opportunity. Oh, Jen, you decided to join the party. Odds favorable momentum and a clear path. Oh my gosh, I love this. Odds favorable, clear path, perfect entry. Buys 2 back at trouble, but because of the momentum holds. Buys 2 more just to take profits, and then gets rid of the last one when things start to turn. From 69.60 to 69.81. $800 worth of profit on the last contract. Jen, was this your first trade? First trade, only trade. So you're saying, that's okay, you call me a tart every day it seems. I feel like there's a little aggression we should probably work out through the therapist. Guys, this is a shining example of how you can spend 90% of your day doing absolutely nothing, but with a solid plan. That's it. The student is the master. And she's got a cooler accent than me, I'm sure. And guys, this is goals, right? Not everybody makes $300. Once you figure some stuff out, you'll know when it's okay to hold for more. Can I do the math? So that's $700 here. And then that's another $1,200 here. And the last one was what, 800-ish? So from 60 to 25 that's 70 ticks on 2 contracts. So 35 twice. And then this one was 62 on each, so 124 plus 70, that's 194. And then this final one came in just under 80. So about 270, Wayne. At $10 a tick, that's a $2,700 trade, give or take. That's one trade, guys. That's a hell of a way to make a living. Jen, I'm so proud of you. 2710. Great job. Trading with momentum. Trading with the path. Trading from an area inside of favorable large triggers. All that dumb stuff Mark keeps harping on every day. Odds favorable, clear path. Boom, boom. Oh, you kept this one a little tighter? Nicely done, Ron. And then Ron says, as long as they keep paying me, I'm going to keep making it. Nicely done. Same look every time. I did not. So, guys, I want you to tell me if you notice something here. And this is such an important thing that I want you to understand. Have you guys noticed that every one of Ron's trades looks exactly the same? And Wayne, just realize that no one's obligated to answer questions like that. And I can't speak for Jen. But guys, don't get your feelings hurt if you ask people questions like that and they don't answer. Some people are private. Guys, every trade he takes looks exactly the same. Almost every trade Jen takes looks exactly the same. They have a plan. They have a very specific set of rules for when they'll enter and when they'll exit. And they follow their plans. And that's why we're watching people have this success. Love it. It's on Apex. What looks a little different, C-Dub? And Wayne, you won't be able to tell the difference between a paper or a real trade on the chart. Your simulator acts just like the regular ones. So odds favorable, clear path. And then C-Dub, you had a big gap between your triggers. And that's kind of weird. I'm not sure why you had such a big gap there. Let me figure out where you got in. Your small chart was showing potential change. And you knew that a mid-band was good. No, I love it. So you waited for the reversal bar because you had synthetics up here and large down here, and you said, man, that's not perfect. Let me get confirmation. You get it, and you ride that wave down. I love it, dude. Great trade. Doesn't have to be the perfect entry, right? But if you know that it's not the perfect entry, well, then you might adjust your entry. And I think this is one of the greatest lessons you can get, guys. When you know, and let me find a picture, because I love pictures. Guys, when you know what the best of the best is. Sorry, I hope that didn't sound negative, Wayne, when I said that. When you know what the best of the best is, when you know what the perfect entry looks like, when you've taken the time to study it, you know when it's not perfect. And this is where C-Dub made the brilliant decision. I'll wait for confirmation because this isn't the best entry look. And I love it. So C-Dub, great job on that, man. You seem to be mellowing out a little bit. And I'm not the best. I'm second best, Jen. Second best. First loser. There it is again. Odds favorable, clear path. Bingo, bango, base hit. I love it. Love everything about it. Guys, we just made it through all the pictures. And if you guys noticed that, and people always ask me, Mark, would you take a trade? Can you trade live? Can you trade live? I think I would learn more if you traded live. Guys, you're not going to learn more from me trading live. You're going to learn more from following the pictures, from learning the looks. Do I have odds favorable momentum? What do you guys think? The larger up, the smaller down. No, that's not my best look, is it? It might go down from here. But I don't even have a clear path. This is what you have to recognize in the moment to keep you out of the wrong trades. Whoa, where did the ES go? Once that midband gets on the wrong side of triggers, you're not sure where it's going to stop. This is where C-Dub would take a reversal bar and say, with this look on the large chart, I'll wait for confirmation and I'll ride that wave of momentum down. Right on. I like it, Wayne. I'm a worrier. I tend to be pretty huggy, feely, touchy kind of guy. So if I think I pissed someone off, I'll just say, hey, sorry. I also have no filter. So it's kind of a double-edged sword for me. All right, Lenny. Tail into momentum, but still good. Area inside of triggers, love it. Stop makes sense. Maybe could have been a little bit higher, but makes sense, Lenny, 100%. Did you have momentum? Yeah, you did. Was the path clear, Lenny? Absolutely it was. Did you have an area inside of favorable large triggers? Without question. Let's take it before a court of law and a jury, and they'll find you innocent. You took a great looking trade. Just didn't work. It did fail for a reason. It failed because the sellers pushed it past your entry. But you can't control that. The only thing you can control is whether or not it looks like this when you enter. Anything that wins 70 to 80% of the time, Lenny, is obligated to lose 20 to 30% of the time. Losses are a cool part. It's a normal part, guys. Losses are a part of the learning curve. Losses are not failures. But you have to know whether or not you had the right set of advantages getting in. And that's why I keep going after this over and over and over again. Right on your charts, momentum, clear path, entry. And you'll never wonder if it was a good trade or a bad trade. It's only a rules met trade or a rules not met trade. Those are your only options. One of them has been proven to win more than it loses. I always encourage you guys to do this. I wonder if there's a way. Take care, Wayne. Thanks for being here again, man. I hope it's starting to click. I know it's only day 2, but it seems like it is. Guys, if you printed this out, no worries, Lenny. If you printed this out with 3 pieces of paper, and every time you looked at your chart, you asked yourself, do I have strong trigger lines? Do I have momentum? If the answer is no, cover it up. Do I have a clear path? If the answer is no, cover it up. And what you're doing is you're saying to yourself, I know what I'm looking for, and if I don't have it, why am I taking a trade? Why am I taking a trade with only 33% of my advantages? So it kind of keeps you focused on advantages. And guys, that pays huge dividends. Take the money and run. Ron, have a great afternoon. Say hi to the bikinis for me. Kenny, you just took a good trade using Replicanto and trading micros on the MES. You had a few take profit accounts and a few cash accounts that closed as a positive trade, plus 190, but the cash accounts went opposite direction and are all negative. Just if I had any thoughts as to why this could happen. Honestly, Kenny, I've heard enough about Replicanto that I'm scared of it. And I don't know how to avoid. And I think that if you ask that exact same question over in Traders Chat, you would probably get a lot better answers. I don't even use them. Nexgen is almost done developing theirs, and I'm going to wait for that one because I trust it, because I keep seeing you guys post things like that. I've had my brother open up and be in a position against him $3,000-$4,000 because of it, or missing trades, and I don't understand how it works. I don't understand the math behind it. And I know there's little tricks here and there. Did you trade during news? Because I think what happens sometimes is it reverses your positions. Like you get to profits and then it reverses you for some reason. And if I'm not mistaken, Kenny, and gosh, please don't quote me on this because I don't use it. My brother uses the market if touched. And I think that that does a little bit to help. But I would take that same question, drop it over in Traders Chat, because you got a lot of people with a lot of experience on these, and I really don't have it. You do MIT too? Yeah, then I'm at the end of my knowledge base, unfortunately. Sorry, man. I know that wasn't much help. That was a failure to help, but my intent was good. My intentions were good, I promise. Oh, there's the C-dub I know and love. Everything says down. You get in on the way down. You keep a crazy amount of risk on it, and you make a couple ticks, and then you get stopped out on a couple ticks, and then you re-enter, and you make some money, and down it goes. And isn't it crazy, C-Dub, that once that line got inside of triggers, it made it a little bit easier. You just got caught up in a little nonsense there. Guys, there's fights on the small chart all the time. And that's exactly what you're seeing. Check it out. You had divergence, divergence, divergence. Right? These start to create problems. Areas on the wrong side of triggers, that starts to create problems. The momentum isn't the best. That can even create problems. These are hard times to trade. When it looks like this, guys, when your small chart is going crazy like that, you're literally watching a fight happen. And you have to decide whether or not you want to be caught in that fight. Personally, I don't care for being caught in the fight. I like it when it's smooth. And typically, this is my brother's words of wisdom. If you're in a trade and it's the right trade, it's typically going to run, and it's going to run fast. If it dances, it's okay to let the dance finish, right? When these large triggers start rolling and getting nasty, Wait for it to all turn around and do the same thing. Might pay dividends. I like it. Guys, what do you want to talk about? We've still got a little time here. And you're all brilliant. No worries, C-Dub. But do you see how you're just seeing the fight? That's all it is. 3 divergences in the same price range may terminate the trend, even with momentum and it's on its way down. Do you guys see it? Isn't that crazy? 1, 2, 3 divergences and up it goes, right to resistance. That should be a rule. My brother sent me a picture of 3 divergences on another chart. I think it was like Tesla or something, and the market changed direction. And I was like, we should have a rule that says that. He's like, God, no shit. Because my brother's not afraid to swear at me. We're pretty good like that. Directly into a termination. If you convinced yourself that the long was the right path, guys, you gave up the clear path. That one would have got me. That's momentum and a clear path and an area inside of favorable large triggers. I'm not going to lie. I would have taken a hickey on that one. It would have got me quick too. Wouldn't have felt bad about it though. Not even a little bit. Would not have hesitated. But then I would have pulled a Pete, and when that one failed, I would have taken a little momentum style giddy up to the down. And you'll get to that point. You'll get to that point. But Lenny, I think Lenny had to leave. This goes back to the whole idea that if these triggers are rolling, guys, the market's telling you something. And you just start to learn these patterns. How'd we do today? Did you guys learn anything? I feel like today was pretty good. I feel like today had some lessons in it that maybe we needed. I love it. I get smarter every day. Bring it up. Wayne, you're as bad as leaving it as I am. I always tell people I'm going to take a break, and then 8 minutes later I'm still talking about something. Drop it in, man. Let's look at it. Potential to break. Multiple divergences, I'll be darned. It blows right through the midband, goes to the top of the triggers, and that's where it starts going down. Dun, 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 dun. Morgan, how are you doing today, man? Out there in California. Following rules. Muser, are you still killing it? Z-Robot, we're going to get you in the fold. I'm telling you. Ringa, good to see your smiling face. Hope your trading's going well. Josh, vibing and watching shows, waiting for something to happen. I love it. All about the vibing. All right, let's take a look. So odds favorable. Not a clear path, Wayne. Not yet. Let me show you why. Your small triggers made it through, but your large didn't. And this is that 50-50 look. And this is the potential to break, but not quite a clear path. But what you do have is you have momentum, and momentum's cool, right? So one of the things you can do on this chart is if you let the small triggers get below the fib, this becomes an easier trade. If the small triggers break through, it's an easier trade because once the triggers start to lead the way, it helps a little bit. And if they're not through yet, that's where these little fluctuations happen, which is okay. It happens. But getting in right there on the left side of triggers probably makes for an easier trade. And all you're doing is you're trading the anticipation of the area to break or the potential of the area to break using momentum as a catalyst there. Does that make sense? Cool. You just got black flag for jumping the start. That's all it was. Just gets a little easier once the triggers get through. You keep getting 50-50 trades with divergence, so you haven't taken them much today. Morgan, can I give you something to study? Because you know divergence sucks on a 50-50, right? Are you comfortable with the idea of a strong top or bottom? Can you recognize it when a termination has no trigger lines through and it reverses the market? And this is for everybody, not just Morgan, but Morgan brought it up, so I'm addressing him. For sure. Okay, but one of the biggest things when I looked at the very nice VCP, one of the things that I notice, Morgan, when people take 50-50s, divergence is put in there as the best of the best, no divergence, because most people don't recognize this one, strong top or bottom. Everybody creates their own idea of what a strong top or bottom is. Once you're good at it, once you can say to yourself, and let's just go find a picture of it, and we don't have any here for a while. Once you can say no triggers break through, take care, man. Go build something fast. I got lost on your Facebook yesterday. Just amazing. So once you can identify a strong top or bottom, Morgan, no triggers through reverses the market. That's where 50-50s tend to be more successful. But it's not just if you ignore the divergence, right? Because in the grand scheme of things, divergence is going to screw up your good time. 2 divergences for me is an absolutely not. But if I have a strong top or bottom, I'm willing to forego 1 divergence because I know that the reaction from that area was solid. It was a decision made right at a key area that turned the market, that gave it odds favorable momentum. And let me be specific. This strong top, I'm not saying that this 50-50 is more likely to work down here at 68.80, right? But if I have a strong top, let's see if we can find an example. Well, and that was just about one. And I get to a fib right on it, or I have a 50-50 right at a divergence coming right from that awesome looking bottom. Let's see what this one looked like. And it was the middle of the night. Let me scroll back. And guys, this is next. This is your next trade. This isn't optimizing your chances of success. But this is a great example. When I have this strong bottom, Morgan, when it reverses, when the momentum is great, and I find myself with that 50-50 close to it, I might ignore that 1 divergence if I can get a low risk shot. Does that make sense? But if it's not a good top, if it didn't reach that key area, I'm less inclined to go after that 50-50. Yeah, so... And I'm trying to find... So what does it mean to have a strong top or bottom? Let's talk about it. This may be a good example. All right. This is so much fun. And Morgan, let me just warn you, you're going to screw this up a couple times before you get good at it. Price reaches the area, absolutely no triggers break. So I'm going to define it on here. When the market reverses, large pinch and roll. What it says to me is that the sellers failed at a key Fibonacci area. And the buyers came in with guns a-blazing. So that fib that is close to them getting in all excited and strong is more likely to break. And that's all it is the sellers came down and they hit that key area, that same key area that you refused to trade into, right, Morgan? And the buyers got so excited that not only could they reverse the market, but they could produce that level of momentum. And this fib had a snowball's chance of stopping them because they were wound. And they can stop them, right? You still have to respect termination conditions. But if I get a 50-50 from here, I'm more inclined to take it. It's got a better shot of winning. It's still not guaranteed to win, right? The same way this one didn't lose because the sellers took over even though it was from the middle of nowhere. So there's patterns that create success or that help foster success, and there's patterns that hurt you a little bit. And when I have a termination that reverses the market, this fib's more likely to break. When I have a termination that reverses the market, that divergence high is more likely to break. And see how here, so far away, Morgan, look how deep the retracement is. The further you get from that strong top or bottom, the more likely there's going to be some sort of fight. So a 50-50 days away from a termination or towards the end of a move is going to be less likely to break that area than the one right here coming right after. Does that make sense? So sometimes people will adjust their plan. And they'll say something clever like, if I have a termination that reverses the market, I'm willing to ignore one divergence. I know that divergence can still kill it, but when I'm weighing out this advantage versus this disadvantage, I like this one. Look at where it's coming from for a 50-50, Morgan. For a 50-50, look at where it's coming from. You probably didn't even know that that was a rule, did you? You've been so hyper-focused on this one. There's a reason that this one's at the top. So yeah, so maybe this will open some doors for you. But scroll back, right? Take pictures, annotate charts. Go back and verify that it's good stuff. Right on. Cool. Well, divergence is the most broken one. That's why it's red, red, red. It shows up everywhere. But this is the one, Morgan, that I take out of the plan with a strong top or bottom. But the one that becomes an absolute for me is two divergences is a 100% no desire to be in that trade. Yeah, check it out and see what it does for you. And I like that you want to do it on sim. So right now we have a termination, right? See how this one was a 50-50? Divergence killed it. And what did they do? They finished their move down to the key area from a bad bottom. And now we're waiting to see. Is it going to reverse and go back up? Is it going to break? Hell, I don't know. I don't even have momentum. So how about if I just do nothing for a minute? And we'll wait and see what happens. Pretty cool, right? The market tells you everything you need to know. You just have to learn how to listen to it a little bit. Thanks for posting that and mentioning that. I just saved you from a loss. So you tried to jump in without momentum and it didn't work, right? That's okay. Jumped right out. Cool. And you know that they're split. And then when you get the confirmation bar with this look on the large chart, you said, there's my entry. I love it. Dude, C-Dub, you're killing it today, man. You're killing it. And all this is an understanding that price may come back to these triggers. But you're not counting on this to stop the market with that look. You say, let me force them into it. Just absolutely beautiful, C-Dub. Steve, you missed most of today's. That's okay. You destroyed all your sound drivers. Right on. Good to have you back to normal. Sorry you missed the day. The video should be good today. I had a set of speakers when I built this new one, and I can't use them. It kept shutting down YouTube and then eventually just crashing my computer. And it turns out that it was the actual speakers. And once I unplugged them, I've been 100% good. Weirdest thing ever. Didn't make any sense. And I had the biggest panic because I had just built the computer. And I don't know anything about building computers. So I thought, man, I screwed something up. My brother's going to kill me. I've never used it either. I'm the most not tech guy you've ever met. All right. Oops. Pete, if you wanted to, and you don't have to, you could not include this and give me more picture to work with if you wanted to, if you felt so inclined. This is a weird one. Triggers rolled, odds favorable, 50-50. Hold on. You were in at 68.15. So Pete, that means that you were in somewhere back here. Directly into the termination condition. Right? You went directly into the fib, brother. Right here. Yep. And you held it. That's a big hold. Mr. Stop by a tick. Knowing where the market shouldn't go. That's a big hold, Pete. I'm glad it worked out for you. Way to let the large chart lead the way with all that momentum. That's scary. 4 divergences, split triggers, 50-50. That one could have gone really, really bad. I'm glad it worked out for you. Chris T, Ninja is not working to eliminate the crashes. My brother, however, is spending an awful lot of his hard-earned money to pay programmers to create a platform that does everything Ninja can do but won't crash. And we're so close, and we're just waiting. And the software, guys, isn't the reason. I've had 3 programmers on 3 computers hooked into my house. Had to give them all my NinjaTrader passwords, and I had one of his programmers do everything that he knew how to do to destroy it, and he couldn't get it to crash with the software, every variation, and then he wouldn't look at it for an hour and not touch it, and then it would crash. It's a Ninja issue, and 99.9% of the time Ninja is freaking outstanding. So I'm not bad talking Ninja at all, guys. NinjaTrader 7, there's people in this room that use it. And it's the exact same code as NinjaTrader 8. It's a NinjaTrader 8 issue. And Jen, I hope so. He's got 9 programmers working on this. And one of the biggest things is, and I don't think people realize the level of brilliance that it took for John to create this software. And now he's trying to get other people to recreate what he did and try and talk them through it. And there's things that are happening, but they are getting so close. And the same programmers are building the funding side and the new copier and all these things. And man, we're on the brink. And Chris, I'm sorry you're frustrated, brother. I lost Ninja today during class. So try teaching class and losing NinjaTrader. But that's my first crash in probably 6 or 7 days. One of the things that I find is if I crash more than once, Chris, and I know you know all this, but I have to say it just for the other people too, is if I crash more than once, my go-to is to start fresh, because there may be something corrupt in a workspace or with my data that's messing. Yeah, Pete, remember we said they don't all have to be difficult? And you're like, I know, right? That's where you let your read supersede your rules, I think. And Jen, we're excited too. We're so excited. I can't wait. And you know what my biggest excitement is, guys, in this funding company coming up? Is my brother's like I was. He spent years in the service industry, and he's so customer service driven. And that's exactly what this company is going to be too. The goal is that all of you guys win. The goal is to give you all the ability to win. We want you to win, because when you make money, we make money. So Christy, you could try the full rebuild and see if that helps out. Maybe it will, maybe it won't. I hope it does. Is it really a pain? Takes 10 minutes, maybe 10 minutes to do a full rebuild. Nice job, C-Dub. It feels like a pain because we feel like we shouldn't have to do it, right? It's like laundry. Laundry is a pain in the ass if you ask anybody, but really all you got to do is set it in the machine and let it do the work. You're not stupid. Nobody's worse at tech than I am, Chris. You just have to do it a couple times. It's just repetition. And I know we feel like we shouldn't have to, so therefore I won't, because F Ninja Trader. But the flip side is we need it. We're dependent right now. So got to do it. Something to think about. And yeah, we're all looking forward to the new platform. And there's all these updates, and we're getting so close. We're just not there yet. Because the one thing that John won't do is he won't put it out there if it's not ready. Guys, he spent almost 2 years starving creating this stuff. Jen, have a great weekend. I'll see you on Monday. Scratch the dogs behind the ear for me. But when he was developing this stuff, some of you work with Mark Dean, Melinda's father. Mark Dean kept them afloat, kept them fed while they were working. And John was working 2 jobs, and Melinda was working jobs, and they were doing everything they could to get this thing programmed. And when it was close, they refused to release it. And when it was correct, they did. And that's one of the reasons Nexgen's been around for over 27 years. Is because my brother, he's not going to give you guys a half-assed product. Which is why it's taken a little more time than we thought. Trust me, I'm excited about it. I can't wait till the first class that I teach on that browser version. The Muser Factor. Man, it has been an amazing week. I'm going to shut down YouTube.